We are going to take up the trailing item, I believe that was 8.3 from earlier this morning, and it appears that we have a confirmed stipulation. County Council,
Well, Supervisor Rassman.
1 second.
We just were handed a stipulation. I'm letting the client read it right now. Could we have 5 or 10 minutes?
Well, then we're going to move on to the next item if you're not ready, and we'll trail
Okay,
to an unknown time.
okay. That was the order, original order.
Okay. So then I'm going to move on to our 6.7 item, which is our 1030 item, consideration of A, resolution amending resolution number 25-118 to amend the fiscal year 2025-26 adopted budget by adjusting reserves, fund balance carryover revenues, and appropriations, and B, resolution amending resolution 2025-119 to amend the position allocations for fiscal year 25-26 to confirm the mid-year budget adjustments. With that, I'll turn it over to our Deputy Administrative Officer, Casey Moreno.
Thank you. So today I have to present your board for consideration the 2026 mid-year budget presentation. Sorry. There it goes. Okay. So first slide, there were a couple slides that were added after the posting of the agenda. This is one of them, which is a 5-year and the current year projected outlook at sales tax. So this does include the Bradley Burns and the Prop 172, which is a half-cent sales tax. The amount for 25-26 is the amount budgeted with the adjustments presented today, which includes a increase to Bradley Burns of about $200,000 and increase of Prop 172 of $400,000. This is another addition, which is for property taxes. So this shows the total with the purple line, the current secured taxes with the blue line, and the property tax in lieu of VLF, which is the red line. We did increase the property taxes in lieu of VLF by $247,958. Next is the reserve adjustments. So just a few to note, the budget stabilization reserve, which is Fund 156, we decreased that by $750,000. Most of that is due to the deficit created in CDD. Next is the building and safety, which is budget unit 2602. We decreased that by $78,033, which is the entirety, so we're making sure that that is available for them. Next is Laco Sand is lowering reserves by $394,310, and that is in response to the sewer spill. And then lastly, various CSA number 23 zones are being reduced, a total of $301,496, and that is to fund the chip seal project. So these are just a few of the revenue adjustments. To note, planning, budget unit 2702 is requesting to accept $150,000 from cannabis, and that comes out of the 30% for the housing and economic development portion, and that will be for the housing element. Budget unit 2703, which is animal control, is requesting to accept $143,012 from cannabis for the copter program. This will purchase a truck and the box, as well as the salary for one officer. And then water resources Watershed Protection District, budget unit 8109 is requesting to accept just over $6.8 million for the California Natural Resource Agency grant. So this is a snapshot of the general fund MOU increases. These are departments who needed additional money, mostly because either their positions are filled or if they unfunded any, and then, well, they didn't refund any, but if there was any that were unfunded, then, but still on the position allocation, that's not a savings. And so this is additional money added to those general fund budget units. There are some that are not on here, and that's because those departments were able to move money around from another object code in order to satisfy the need in salary. So just a few, yeah.
You want to ask that now?
Yeah, just on that, so it was about 3.4. You're saying that some departments were able to figure it out due to whatever other savings they may have had. So we should anticipate to see that be the future impact as of June plus those other departments, because they're still going to want to potentially have the same expenditures that they were planning on doing, that they happen to have savings on this year. So at minimum, 3.4 plus will be the continued impact to the budget, not just the 3.4.
Possibly. I'm hesitating only because there was a lot of large increases this first year. And so next year, we're looking at 3.5% per the MOU. And so it will be a little bit more on top of this. We're going to be working very closely with departments this next budget cycle to make sure that money is allocated, because as you may remember, there's been about 20 million that's been carried over each year. So we're trying to work with departments to better make sure that the money that's allocated is spent and not over budgeted. Okay, so just a few appropriation requests. So Budget Unit 1904, Information Technology, requested additional general fund of $86,876 for increased storage for departments, Adobe Sign, or Acrobat Sign, backup service for Microsoft 365, Adobe Sign, and Audio Eye ADA compliance. Budget Unit 2205, Sheriff Marine Patrol, requested additional general fund of $170,101 for an increase in liability insurance. Parks, Budget Unit 7011, requests to increase the budget for the rehabilitation of Buckingham Peak Communication Site by $64,000. So here are all the position changes that have been requested. So the Treasurer Tax Collector is adding a Chief Deputy Treasurer Tax Collector and an additional Accountant Auditor 1-2 Senior, and removing the Accountant Auditor 1-2 Supervising. A few others. Code Enforcement is removing vacant positions. And then there's a few limited term positions being added for public health and or removing the ones from jail facilities. So on the capital asset list, there is one minor change to 2206. There should be a comma between pursuit and truck. Want to make sure that they get the vehicle they need. Roads in Budget Unit 3011 is increasing the South Main Street Rehabilitation Underground Utilities Project. And Budget Unit 8695, Special Districts Administration, is increasing the amount for their roof replacement. So after we finalized, there were a few additional changes that needed to be made. So for Budget Unit 1781, there was a request for $20,000 for countywide veterans homelessness. So that money is currently allocated, so there's no actual budget change. But we are looking for board consensus if that is something that you want to spend the $20,000 on.
Can you explain what that is?
If you'd like to finish your presentation, I can
Okay.
specify that at a later time.
Sure. Then position allocations in 2301, has already been approved, and it was just missed on the position allocation. One sheriff sergeant limited term. In Budget Unit 4011, the program manager should actually be titled Health Services Program Manager, and that is a limited term position. And there's a little asterisk on there that says remove upon next vacancy. That should be removed. It should just be limited term. In capital projects, Budget Unit 2206, add the comma, and then $800,000, which will be budgeted in Object Code 6271 for furniture, fixtures, and equipment, and that's for the armory remodel. And then $200,000 for radio infrastructure, budgeted in 6274 for the Object Code. And one additional change that came even after doing this slide. We need to increase the revenues in budget unit 2115, which is domestic violence programs. And so we are increasing the revenue object code 3182 by 3,000 and 6920 by 4,500, and increasing the appropriations in 2380 by 7,500. And that concludes my presentation.
Supervisor Sabatier.
So, going back to the countywide veteran support, there was a new pick count that was done in January. We've been kind of hovering between 12 and 14 homeless vets, and now we're up to 20. So we're seeing an increase. The number has been steady for reasons that we believe, because we haven't been able to reach these vets, hence why they're continuing to be homeless or unsheltered, as I've been trained to say now. And veterans reach veterans so much better than agencies, government, or anyone in authority. And when we're actually working with the veterans to try and do a stand down at the simultaneous time as we do a pick count, so that we can really connect with the largest number of vets, so we can make sure that we're understanding who is experiencing homelessness. And many of the programs that we provide that are going to help with sustenance or other things of the kind, again, unfortunately, for reasons that are personal, vets choose not to access those programs, but they will reach out to a vet and ask for help. We have a group called We Serve Veterans. We've met many of them. They're sitting here in front of us, and they work throughout the whole county and are able to access those vets so they do not fall through the cracks. And that is the request for the $20,000. There would be something in writing. I would expect a report back on the specifics on how that was spent, but it would be to support veterans who are homeless and to support veterans from becoming homeless. Most of the things that they support them with would be food, but it would be through other means as well. And that can be limited in the final agreement that we have, but that is what the $20,000 would be used for. Supervisor Owen is not here today, but her and I have met with this group. We've discussed this thoroughly, and that is still the ask and the hope that we can help out for the fact that we thought we were at a functional zero with our homeless vets, but unfortunately the number has gone up.
Well,
Go ahead.
well, thank you for the explanation. I would like to know more about I'm okay with allocating it right now as a one-time to make sure, I don't know with are you considering this an annual, or is this one time?
At this moment, it would be a one-time.
One time. Okay, so yeah, I'm fine with allocating it. I do want to have a presentation and find out what's been done and, what other resources we can access. So I'm okay with that.
And I think it would be great to even invite the We Serve veterans and for them to present to the work that they've already been doing and the work that we'll continue to be doing. And that could be the day that we approve and finalize everything as well.
So just so I understand, the agreement or the write-up that's going to be worked out, would that come back to the board?
Yes.
Okay.
Yes. I don't know if it has to come back to the board, but I think if there's going to be a presentation, we could provide it. It is a number that is below the threshold for needing approval by the board, but let's be transparent about it and make sure that we share that agreement with the board. And if there's any concerns, that can be discussed as well. But I will work, I'm sure Supervisor Owen and myself will work with admin and make sure that that meets the expectations of what we believe the board would expect it to be, and work with the We Serve veterans to make sure that we can get the funds to the right people.
And that would be great for them to come back and kind of let us know with that report. I agree with that.
Yep.
So, okay, go ahead.
Yeah, so I did have some other concerns and questions. I believe this is our first time we're touching our budget stabilization fund. Since it's been created. That's a level of concern, and I know some of that has to do with some of the issues that we'll be talking about a little bit later today related to community development. But it's not the entirety of the 750,000, 725?
Yeah, the 750.
Yeah. And so I just wanted to highlight that. I think that's something we need to pay attention to. It's been there for quite some time, and the fact that we're touching it is just a slight concern, especially if we are seeing an increase in our sales tax and if we are seeing an increase. So I know we have other responsibilities that we've tacked on, like the payment of the loan that we have, things like that, that adds on to what expenditures we have. But I just wanted to highlight that. I think it's the right time to bring it up because we're talking about reserves and budgets, and I only know what I know until I know better. And I've learned this year something that I would like to see different for the fact that, again, we're having these difficult conversations about where we're going to go with certain departments and so on and so forth. Because I feel like a flag was not raised to the Board of Supervisors until it was like, you don't have a choice, you have to make this happen. And so I always thought that when money was in reserves, that it would have to come back to the Board of Supervisors when we touch the money in reserves, and that is not necessarily true. It can be used as cash to help pay for certain things. I was not aware of that. I think it's important. I get it that it can be used as cash, and then it comes right back in, and it's whole in less than 30 days. But I feel like if there's a gap where the repayment didn't happen, we should probably be highlighted that something changed in the reserves, because when I see the reserves, I expect it, unless we've approved it, that it's not touchable. But again, I've learned more information to better understand, and that's not the case. So I'm wondering if there's some kind of threshold that we can work with, or you can bring back to us as an option for what that flag would be. But I don't think we should learn of some of these issues at the deadline and kind of be stuck in a corner with decisions to make, because I think that's when we're going to make the worst decisions. So that's what I'd like to bring up, is to get a better understanding of that. I think that was all that I had. No, I had two more things. One, thank you for the reserve adjustment list, so I could take a look at all of the reserves. I feel like that's not the most up-to-date reserves, just because I was looking, and very importantly, wanting to look at the Southeast treatment plan, and it still has a whole bunch of money. Is it just that we've encumbered the cost, but we have not paid out the cost? Or, because there was a lot more in the reserves there than I had anticipated to see when looking that over.
I would need to defer to the department on that because I do not have the answer.
And it looks like she heard the bell ringing. Thank you, Director Boyer.
Good afternoon, Board. I'm Robin Bore, your Special District Administrator. And you're recalling the cost of the sewer spill that just happened in January. We intentionally did not bury that in the mid-year. We want to bring that back as a complete transparent item. So when we accrue all those costs and we know exactly what they are, we will bring that back as a standalone item so you can see it in detail.
Okay, so at this point, what I'm seeing in reserves is not, has not been reduced by
Correct.
the cost. Okay. All right. And do you have a timeline of when that might be, when you might come back?
We're still receiving some invoices, so I would expect in the next month or so. Yeah.
Okay. And then just a direct question, and I don't mean to put you in the spot, though that is part of the plan. Do you have any concern, because we don't have a red flag system at this moment in time, are there any specific budgets that you share some concern that the Board of Supervisors should be aware as to where things are at this moment in time?
There's a few that we're monitoring. We don't really have any concerns that anybody's going to run out of money right now. But we historically have not been tracking any department's cash account. So we just look at it budgetarily, it's balanced. Whether they have the cash to back it, it has always been the responsibility of the department to monitor that as they pay their bills. Do we have cash? Yes. So that has not been something that we've been monitoring, but we are starting to. Additionally, we don't have enough staff to monitor at a level that we would feel totally confident. it would need research and monitoring everybody's cash every day to see what expenses have happened, especially right after payroll on the first of the month. And then looking at trends. So there would be a lot more to that. But we are watching a few different departments. Special districts is one that we are monitoring just because of the sewer spill. There's nothing that is screaming to us that there's going to be an issue, but health services also, because they were helping with the sewer spill, and environmental health just got some money, or will be getting some money from the emergency disaster fund to cover overtime. Of course, monitoring CDD and behavioral health, because both departments do have loans. I can't think, I feel like there's one more, but I can't think of who it is. But we are trying to monitor the departments that we have any concern with. As far as general fund departments, we don't have really any concerns. CDD, because of their non-general fund department, we are monitoring, but their general fund budgets, we know where they're at.
Okay, I appreciate it, and maybe my question would be better served, aimed at our auditor controller. Is that a better access to that level of information?
They do, I'm not sure if they do it weekly or daily, but they do run reports on cash.
Okay.
Which I have seen that report, and it is lengthy. Oh, there you go.
I can just,
Go
I
for it.
just wanted to mention that, yeah, so every day a cash report is run by our GL accountant. I do see it every day, and when we do see cash, if it's concerning, we reach out and let admin know so they can do their thing.
Okay.
And one thing on that report is, like, there's some funds that have such a small dollar amount, and that's normal for that fund. So to look at it as, who's only has $100,000, that wouldn't tell us if they're getting close to running out of cash, because that might just be normal for it.
Okay. And then part of the reason that and I appreciate that, and I'll make sure to speak with Ms. Harrington about that. Part of the reason I wanted to look at the reserves, especially for the Southeast, was to get a better understanding of what is left over, because there's still work to be done. I know we're aiming for a lot of grants and using other people's money, but at the same time, I'm trying to get an understanding of what can we do today and now, and it's hard with not having that updated at this moment in time. Just a final comment. I know that we moved around. I know I spoke with the sheriff, or at least in email fashion, about CalAIM, the jail initiative, JI, jail something. And I think it's an important one. And if I understand correctly, it might be moved to another department. I know it needed to be taken down for a moment, but I'm hoping that it stays and comes back, because I think it's an important one for those that are incarcerated to get that warm handoff and that support. So just final comment, that's it.
Okay, any other questions for the board at this point before I open it to the public? Supervisor Crandall?
Yeah, after the reduction for $750K for for the stabilization draw, what's the percentage gonna look like in June?
What do you mean, the percentage?
Like let me see, general fund reserve percentage, I'm sorry,
Oh.
yeah.
I do not have that off the top of my head, but I am happy to get that for
You
you.
can get it to me, yeah. And then I see one other thing, and I think this is a Maria question, and I think it's answered, but with the two officers, the whole position, yeah, that whole position, is that gonna be covered by copter? Is that what we're looking at here?
So the two positions that are being removed are not funded. After this is approved, they're not funded, and so we're removing those.
Okay, so it has nothing to do with
they're-
okay.
no, no.
That's what I was
Yeah.
wondering, is like, I thought maybe that the positions were being removed so that way copter's covering it anyhow, but that's not the case. Okay, thank you.
Go ahead, Supervisor.
Yeah, and just wanted to finalize on the veteran allocation, just making sure that there's consensus for Supervisor Owen and myself to keep working on that and bring that back as
Yes.
soon as possible to the Board of Captains.
Yes.
Okay, appears nothing further. I'm going to go ahead and open this to public comment at this point. If anyone wishes to speak on this item, come forward, you'll state your name, and for the record, you'll have 3 minutes.
Good afternoon, Mr. Chair, members of the board. I looked at these numbers in detail, and in the spirit of what, of the red flags and being able to do proper, transparent governance, I would advise not approving a resolution for this at this time. Not that the numbers aren't wrong or inaccurate, but you can't really make an informed decision based on what's been provided. To just sort of put it in a sort of an analogy, it's like getting a bill from PG&E that says, please pay $48.17 less than what you paid 6 months ago. So what do you write the check for? There's nothing in the data that was provided that tells you what you paid 6 months ago. In parallel, these are supposed to be adjustments to the budget that you approved back in sometime last year. And there's no reference in this to see where that money's going. So that's my main concern there, is that because you don't know what you adopted in this data, you don't know what the impact is up or down in the grand scheme of things. And when you do add that stuff, you start to find some interesting things. And I think a better report is what's needed, because the report as provided and the data that's provided does not provide for good governance. I think there's a better way to do it. As an example, you have in front of you the CDD. I do show what's been adopted. I went into your budget online, added that number, and the revenue for those departments and what that lost, and that's over $1 million in lost revenue from what you adopted. But in the current form, you wouldn't have known that. The same thing when it comes to expenses. The total expenses has increased by over 130K, and you wouldn't have known that based on the data that was provided. So it's very difficult for an executive to make informed decisions when you don't have that information. And as you can see, the net cost has shifted from $770,000 for those three departments to almost $2 million. So 250% increase in the net cost just by these adjustments. But that's not visible in the way it's been performed, or the way it's been reported, excuse me. And you kind of get what you tolerate. I think it was really good that Mr. Sabate brought up the idea of red flags. I find it ironic that earlier today there were 3 consent agenda items for petty cash of $150 that required board approval. But as Mr. Sabate pointed out, hundreds of thousands of dollars can be just slid back and forth with no governance. That's not a sound process. Thank you.
Thank you. Anyone else in the room wish to comment on the budget? Not seeing anyone, we'll move online. No hands. I'm going to bring it back to the board and I need to actually call a 5-minute break. We're going to be in recess for 5 minutes. I call our meeting back to the order, and at this point, this item is back in front of the board for any further comments or discussion or possible action. I believe I closed. Did I?
Thank you, Mr. Chair. So you could just confirm that public comment is closed. I believe it was closed and brought it back to the board, but
Yeah, my recollection is that I had closed public comment, brought it back to the board. Go ahead, Supervisor.
Yeah, just want to add, there was another position allocation for the district attorney. Correct me if I'm wrong, but that is a temporary position that eventually, it doesn't wash itself out, but kind of, the position allocations expands, contracts, but there's a change of position, correct?
Yes, there is sorry. Yes, they are adding one legal administrative assistant / senior, and then another position will be removed upon next vacancy, and that is because somebody will be retiring, and so that way they can cross-train.
Yeah, so I just wanted to add that because it makes me nervous at this moment in time to add positions, and I know that was one of the questions I had with the admin team yesterday, and I felt a little better at ease, but it looks like we're adding a position, but we're not really. It's just a temporary thing. I also did want to add, appreciate the handout that we received. I mean, to me, it's not that we lost $1 million. It was adjusted for $1 million. But if you look at the history of how we do things, which I'm not an accountant, but for example, in 23-24, for planning, we adopted 2.8 million. The actual was 993,000. Like, what we anticipate and what we actually do are sometimes two completely different things. And I don't think it's a shot in the dark. I just think that it's hard to really tell what exactly the type of activity will be at the that comes to the windows. And so I'm seeing a lot of those types of things where 22, 23, we adopted 1.7 million. The actuals are 1.1 million. That was, again, just for planning, and it does the same thing for housing as well, and it does the same thing on the other side for what our expenditures are. So I appreciate that, but just looking at the adjustment without looking backwards as well and seeing the trend, which makes it difficult for me to understand sometimes, because I feel like we're putting a lot of anticipated money and maybe spending money that we will not have, which could potentially be why we're in this situation. And also, I just want to state, I don't understand the cannabis reserve adjustment because it doesn't match the numbers that I have. So I'll be reaching out to you just to see if I can check in on that, because that was not the adopted revenue that I'm aware of. And that is not the balance as of June 30th, 2025 that I'm aware of as well. But I at least wanted to speak to it since you spoke to us about it. And I'm ready to move forward. I have the consensus that I needed to be able to move forward with the veteran allocation, and hope to bring that within the next 30 days.
All right, ready for final action? Go ahead, County Council.
Oh, thank you, Mr. Chair. So it appears that there's two resolutions that would need to be approved by your board under sub-items A and B. My suggestion would be for your board to offer each resolution, but actually name out the resolution so that there would not be any confusion.
Okay,
Mr. Chair, I offer the resolution amending resolution number 2025-118 to amend fiscal year 2025-26 adopted budget by adjusting reserves, fund balance carryover revenues and appropriations.
that resolution's been offered.
Okay, Supervisor Sabatier?
Aye.
Supervisor Crandall? Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye.
As amended.
As amended.
As amended.
As amended.
That's what I heard.
Go ahead, County Council.
So procedurally, with the vote having taken place, I believe your board can then move, what's present before your board would be a motion to reconsider the action that just took place and take public comment of that. And once that motion's been approved, next step would be a motion to rescind the prior action. which would then reopen the offering of the resolution as amended. So if your chair wishes, I could walk your board through that.
Yes, please.
So the first one would be a motion to reconsider the previous action that just took place in regards to the adoption of the resolution amending resolution number 2025-108 to amend fiscal year 2025 to -2026 adopted budget by adjusting reserves, fund balance, carryover revenues, and appropriations. And your your board may wish to take public comment on that motion to reconsider.
So moved.
So we have a motion on
It
the,
would not be, I'm sorry, it would not be a motion at this point, but just take public comment
right,
on that
right.
before motion action.
right, so we have a
At least we know the action.
possible motion. Is there anybody in the room that wishes to comment on this, this possible motion? Not seeing any?
Consider.
No hands? Okay.
So then it would be a motion to reconsider as outlined by myself, as proposed by myself to your board, a motion to reconsider the previous action. That would be the motion language.
So moved.
So we have a motion
Second.
and a second. All in favor?
Aye.
Aye. That motion carries 4-0.
So the next step would be a motion to rescind the prior action of your board, since it is now being reconsidered. And that would be the motion under sub A of this agenda item 6.7, and your board may wish to take in public comment on now would be a motion to rescind. Consideration of a motion to rescind that action.
Is there any public comment in the room? None in the room, none online. Bring it back to the board.
And the
Move to
motion,
rescind prior action.
Second.
I have a motion and a second. All in favor?
Aye.
Aye. Opposed? Hearing none, that carries 4-0. Go ahead.
thank you, Mr. Chair. So now it would be to offer the resolution, amending resolution number 2025-118 to amend the fiscal year 2025-2026 adopted budget by adjusting reserves, fund balance, carryover revenues, and appropriations as amended.
I offer the amended resolution.
The amended resolution's been offered.
Supervisor Sabatier?
Aye.
Supervisor Crandall?
Aye.
Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye.
I offer the resolution amending resolution 2025-119 to amend the position allocation for fiscal year 25-26 to conform to the mid-year budget adjustments as amended.
That resolution's been offered.
Supervisor Sabatier? Supervisor Crandall?
Aye.
Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye. That concludes that item. I'm going to inquire of our assessor, do we have a final resolution? Yes. Then I'm going to call 8.3, which is a trailing item, back up, please. Swear in again, Lloyd.
Yes, it will be. And just for, thank you, Mr. Chair. And just for clarification, this would be, your board is calling up agenda item number 8.3 as it relates to the assessment appeal application number 05-2023 Jameson.
Correct. And we're considering a possible stipulation or a
Yes.
final resolution.
And if I may, Mr. Chair, going back to your question, witnesses should be sworn in.
Yeah. So go ahead and stand. Anybody in the room that's going to be offering testimony,
Okay.
be sworn.
Do you solemnly swear that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth? Yes. Thank you.
Thank you. So you want to start? Stipulation has been signed. Okay.
We accept this stipulation.
Okay. We have a signed and accepted stipulation.
That was for
Which is-
80,000.
Correct.
Thank you. And it's being shown up on the screen.
That is correct.
With counsel for the appellant confirming it appears correct? Yes. It is correct? Okay. Any further questions from the board? You want to walk us?
Yeah. Thank you,
through?
Mr. Chair. So your board may want to check first to see if there's any further testimony from anyone who may have been sworn in before closing testimony.
Was there anyone sworn in online or here that didn't testify that wants to?
No further testimony from appellant.
Okay. Nothing further?
Nothing further from the assessors.
We have nothing further.
Like to offer a motion to approve the stipulation as submitted for the assessment appeal number 05-2023 Jameson.
And if I may just add
Yes,
as part of that
please.
motion for your consideration, it relates to, that pertains to APN 050-693-070.
Okay.
That's
Do
what I
have a
meant.
Second?
Second.
All in favor?
Aye.
Opposed? Hearing none, that carries 4-0. Thank you.
I'll see you at the store.
Now we're going to move on to our 6.8, 11:15 item, which is consideration of presentation of deficit tax default land, sale letter and memo. That was A, and B, discussion of potential impacts to pending and future tax defaulted land sales. And we have our auditor controller, our tax collector, and our assessor here to present this item. And Ms. Harrington, will you be starting? Thank you.
Thank you, Board. I'm Genevieve Harrington here with my cohorts, as you mentioned. Just to bring this topic back up, I mean, we've been talking about it for quite a while now because my office has been dealing with the work that resulted in, well, a series of things that have occurred over the years that resulted in a bunch of deficit sales happening in a very short period of time. And so, I mean, for a couple of years now, I could see that it was going to be something that we want to deal with as a county, I guess, and then, and to come up with a plan, because I mean, going back to February of 2020, when my predecessor sat up here and presented on the deficit sales, letting you know that if we proceed, that exactly this will happen, that overdistribution and likely clawback, which is actually called a negative apportionment, that the potential for that was great. And so, so I do think that we've known this was happening, and so my office finally got to the end of all the work, all the calculations. We were able to see exactly what was collected, exactly what was not collected, what portion of that is covered by teeter, and what portion of that needed to be recovered. And so that's what we've been talking about for a couple months now. And the board had asked for a letter, which I did. I did my best to try to explain property tax. I mean, there's a lot to it, but to summarize it and to identify the events that happened specifically in Lake County that led us here. So, not sure where to go from there. So I'm here, I have the letter, I have a plan. I know there's some questions, but I'm not sure exactly what they are or, you know, what the best place to answer it is.
Patrick, do you want to?
I can probably provide some additional information. I'm joining in the presentation because this really does touch on tax sales and the tax defaulted sales that we've been doing. Part of the underlying issue here, what's leading to the necessity for the negative apportionment by the auditor's office is related to direct charges. And that's something that I really want to highlight, that out of the tax sale, the piece that we're speaking about is not the underlying 1% tax. That is what is teetered here in Lake County. There are other counties that do teeter direct charges, but we never did that. So essentially when we set up a tax sale, the way our software works is that upon completion of the sale, it shows that the property was redeemed if there was a bidder. But the amount of taxes owed can vastly exceed the actual sale price. So for instance, we have properties that are, you know, practically unsellable, or they're, you know, they're valued at, let's say $1,000, or that's what they sell for. We have to drop the bid down. There could be $20,000 worth of debt associated with that property. of which, the vast majority of it often are direct charges with penalties and interest. This is especially true, you'll see where there are abatement liens, where there will be an abatement lien on a property that's only worth a few $1,000s because an agency had to go in and clean it up. But really, at an auction, we're not going to get a $10,000 bid, let's say, if that was the cost of the lien. We're lucky to get $800 or a few $1,000s. So where we see these deficit sales from my office is most prevalent in the low value lots. Just because it's the ones that have the most difficulty selling at auction that require us to drop that price down. They're the ones that are upside down. So we drop the price down, that becomes a deficit sale, because we get a successful bidder. But the software we have isn't really able to understand the concept of the deficit sale. If you recall, we're sort of an unusual county. We're one of the last 7 or so that don't have a low value ordinance. So it's, our issue is somewhat unique. We have a really large amount of properties in the tax defaulted inventory. That's why we're doing those 1,000 property a year sales. So while other counties may have a few deficit sales to deal with, they're able to address it differently because the auditor's office has to go in and do these manual revisions. And if that manual revision isn't done before an apportionment, that system wants to push that money out to the affected agencies. So I just want to explain, I think it's really important to understand that while we have talked about teeter, while teeter is somewhat adjacent to this, these are not teeter.
It's not, just to add to that it's not the teeter codes that is guiding what we're doing right now. I maybe shouldn't have brought up teeter as much as I did, but the teeter is relevant because it is what drives us to pay the agencies before we've actually collected, so that mechanism is in place. And then it also is, just as far as repayment, it seemed the most opportune time because cash flow is not an issue when teeter distributions are happening. But that is the only relation to teeter. It's not the teeter program or the teeter codes that are guiding the negative appropriation that we're doing, or that we're bringing forward.
There are just a few other points I wanted to touch on beyond that. So anyways, it's the coding of our software that's trying to push this through. We're basically having to work to defeat the very nature of our system here because we're just not structured like a normal county because we are collecting on everything. What I would say too, just the way it works in the rest of the system when there are state audits, that audit has a 5-year look back period. You get the findings a year or 2 later. The state makes the counties reach back all the way to the beginning. And if there was an under-apportionment, an over-apportionment, if there's any kind of issue, the state auditor forces you to correct it. And they authorize 3-year repayment plans. I think you can go up to 5 with permission from state controller or auditor. I don't know. But I mean, so the 3-year repayment plan that was being proposed is sort of grounded in, that's the same way if this were addressed in an audit that you would deal with it. And just finally, for everything else, at least from our office's perspective, every case we know of, this is how it, the way that the auditor's office is approaching it is the structure that we see where, if a county has made an error, if the distribution has been over or under what it should have been, they have been required to go back to the beginning in order to correct it. Whether it's positive or negative for the other agencies. So I just wanted to get out there in the beginning here that, what's happening here is the normal process. I think what isn't normal, unfortunately, is the nature of our system, that we have this massive inventory of low-value lots. So, I mean, it is really, I feel for agencies that are seeing this large number change because it's the scale. Right. Other agencies are not experiencing that volume, so.
Oh, sorry. Yeah, just the sheer nature of 257 deficits within a few years. I guess that's just a very, very unusual, or has never happened before. So. And I just guess I do think it's important to note that ordinarily the tax collector would not bring all the deficits at once. They would be brought, some would be brought in with regular sales, but because of the nature of litigation and the other agreements that or mandates that have been put on the tax collector, we've been forced to bring all of them when we would not normally have done it this way.
So Rich Ford, Assessor Recorded, so I'm here kind of for.
I think you're on.
You guys know how much I love microphones, so. So I'm here for support, but also to kind of chime in on a couple concepts. You know, we've all had it where our bank pays too much into our account, right? Like I'm an outside controller, right? I know, never.
Really?
It's usually not a lot, but
Only
usually
monopoly.
it happens occasionally, right? And there's no rule or law. Like before I showed up here, I was an outside controller, Fortune 500 company, all that. There's no rule or law that ever says that you cannot go back and go get that. And so, you know, you generally, the best thing is go back to the bank and give them back the whatever money they gave you, right? And it's the same concept here. I also wanted to allude a little bit to what Patrick said is there's 33, 35 counties out of the 58 that are under our property tax system, which is megabyte. And if all of those counties didn't have low value ordinance, which most of them do, this fix in the system more than likely would have already happened, right? Because there would have been a big uproar to get that fixed. They've brought it to megabyte to get it done, and we'll see how long that takes. But there's not a big push because a lot of them has low value ordinance, which then kind of shields the mechanics of this kind of process. So it's kind of just all of this, like Patrick and Genevieve said, this is normal course of business, not just for government. This is normal course of business for outside when you're dealing with finances and accounting, right? And so this is not unusual. It is a little unusual that you allow them a couple years to pay you back. That would be the unusual part that I would see outside versus inside. But, you know, recognizing that that's what's going on with the system. So just wanted to kind of chime in there is that's pretty normal course of business. The other thing I wanted to open up a concept to is, from what I know, and I used to be the assistant auditor controller in Genevieve's office, not under Genevieve, but under Kathy, there's the concept of gift to government funds. Like, I don't know that you technically cannot glean it back. And that's probably why the state controller, when they come and audit us, they force us to go back and make sure that that is made whole. Because whatever is recognized, we can't, just because it's an outside agency that happens to be another government agency, we can't gift it to them any more than you could gift it to anyone else. Or at least that's my understanding of the concept. So, and Boyd could probably chime in on that a little bit further than me. But that's what I've always understood it to be. And so I just wanted to make sure that that was kind of understood a little bit. So that's it for me. I'll turn off my mic.
Just to add to that, the couple of years repayment, and so it is not normal. Normally, we would just have to recover it all, but because that's why I wanted to propose the multi-year repayment, because it took us multi-years to get through this, to figure it all out. It seemed the right thing to do, and so that's why I brought it to the board's attention, and why I wanted it to be a county discussion, so that nobody was surprised. You know, we haven't done anything yet. We've been talking and calculating and talking and calculating, and so we're preparing to do something, but nothing's actually been done other than calculations.
All right, I'm not sure who is Ben or Supervisor Crandall.
I don't know if you mentioned it, but the balance of the tax losses reserve fund, do you have the current balance of that as of now? Did we state that?
The teeter, the tax loss.
Yeah.
I don't have it on me. I know we try to. I were to estimate it, say about between 8 and 9 million.
Has there been any contributions to penalties and interest over the last 10 years or so? Or, I mean, just in general?
So what I can say about that is at the end of the year, excess is often transferred to the general fund, but there's been no excess in my time because of the deficit sales that I basically came into it. So, but I do know in the past, so there's a calculation for the tax loss reserve, I think 85% or so. We try to make sure we have enough to backfill the county's tax portion for a year if anything were to happen. So that's the guide that we stick to. So I don't know how to answer the penalties and interest being added, because that flows in and out. But as far as what we keep in the tax loss reserve, that's the guide.
Do you know of any other counties that absorb the deficit, potentially here? Or?
Well, what I can say is we are absorbing the 1%. So
Right.
any portion of the sale where it's sold for less than what the 1% was, that's being covered. The only thing is when additional charges were being added. So the 1% base tax, we're not, the tax loss reserve is absorbing that. It is only the add-ons, the direct charges.
And so-
The bill could be $5 and an agency can add 1,000, 10,000. You could turn a $5 bill into a $15,000 bill. And so it's only those excess charges that are not teetered, and if we did pay them inadvertently when it wasn't collected, that's the piece that we're recovering.
That's kind of where I'm going with my question. Are there other counties that absorb the same way? Did you look into that? Or?
When you establish your teeter fund, if you decide as a county that you are going to teeter your directs, then yes. And so this county, in the resolution from 1996, we do not teeter the direct charges. And that's common too. So I believe I haven't gone out and polled, but I feel like you see a lot of examples of both.
So in 96, we decided not to do that.
We established teeter, and we decided we were not, that our county did not direct,
But we could. We have the discretion to do that.
Yeah, I don't know if you have the fund, I mean, you probably have to find the budget to do so, because again, you have to be, well, yeah, that would be a whole separate discussion, but yes, the county does have the option to choose to do that.
Can I chime in a second here?
Yes.
Just to give a little accounting background is, you have GAAP accounting and you have a matching principle. So the fact that you only collect for the 1%, you can only pay out the 1%. Otherwise, you'd kind of violate the matching principle of the GAAP, generally accepted accounting principles. And that's pretty much what she's describing is she can't magically start taking direct charges because she's only collected for one nature of funds in teeter, right? So she can only take that because she would violate GAAP accounting doing it. And so she can't do that unless you guys change the nature of that with her, working with her. And then from that point on, you could probably do something about it. But the current funds that are in there have one nature. The nature is, the actual property tax valuation.
So something else that I was going to add on to that too is that I am familiar with some counties that do teeter their direct charges. There's a large element of risk, and I think it's related to what you're seeing here. So just for everyone's benefit, the benefit of the bargain with doing teeter is that the county is smoothing out the revenue for the districts. Every year, the auditor's office is pushing that tax revenue out, regardless of whether people pay. So every, city, fire district, everybody is getting that 1%, even if no one ever paid their bill, and the county eats that. The trade-off, the reason counties were encouraged to do it, and the reason when counties weighed whether or not to do the plan, that they went forward with it, was that you get to keep the penalties and interest. So the county eats all that risk, and they're supposed to recover an auction. The problem we have here is a systemic one. We, unlike the other counties, issue a tax bill on everything. So we do issue like a $5 tax bill where there's a $50, fire district fee, where there's a $10,000 abatement. Because we don't have a low value ordinance like everyone else, we're way out of whack. We're not like the other ones. So I just think it's interesting because it's so many different points in this. We try to talk to other counties and kind of what you're getting at, but we are structured so differently. It's really hard to compare us. And I just wanted to throw that out there.
And I guess I just want to, as we're thinking about this, there are situations where if some agencies, if they know that the direct charges are going to be teetered, sometimes charges are added, sometimes the tax bill can be taken advantage of. And so sometimes charges are added that are just far above the amount of the bill, and then the person can't pay the bill, and then their property is going to be auctioned. So there are negative impacts to teetering the directs as well. So it's just something to think about, because you want to be careful about what is added to a tax bill. I mean, it's not something you can put on a payment plan. It's very, as far as the due dates and so forth. So again, making sure that the tax bill is.
But we're asking them to be on a payment plan for.
Well, so when I say so you don't get to. When we make the tax bills, when we're adding so many charges to where the person can't pay, they're kind of stuck. You can't say, you know what, I'll just make you installments. I'll pay for you. You can't do that with a tax bill. There are some very severe revenue and taxation codes that guide the the billing process. So it is just something to be mindful of, because when you do, if you are a county that teeters directs, there's really, it's just motivating for other agencies to add more and more charges onto the tax bill. So I do encourage you to talk to some other counties who teeter directs just to get some more information.
We do allow payment plans in circumstances where the bill is not defaulted, so there are payment plans.
Thanks, Pat, touche.
Sorry. I shouldn't say, but not, yes, so there are payment plans, but it's a 20% down. It's a very strict payment plan. So what some don't realize is that you can't just negotiate with a, I guess with a property tax or with a property owner, that it's a very strict payment plan.
I'd feel more comfortable if we had the ordinance in place before I made this decision, but that's just me.
For what?
The low value tax ordinance,
Oh, to make what decision?
this one.
Which,
Are you asking us to bring it back up?
I'm just, I would feel more comfortable if we had one, because it's what you mentioned, that
I
other
would
counties.
too. I would too, because, we just, again, I want the problem to stop perpetuating.
Right,
We've done
right.
a lot of work, we're trying to fix it, but I would like to see the low value ordinance in place as well. But just so that we're clear, Revenue and Taxation Code says I need to recover this money. So we aren't really deciding if we're taking it or not. I have to move forward. Unless somebody else has another government code that supersedes RNT 4707 to 4711, I have to move forward with it. So we're noticing everybody. We have the plan. We were planning to start July 1st, 26 with the next teeter distribution for in this upcoming year. But it's not really something, I do not have the authority to say no.
Oh.
I can put it.
Sorry, there's no action, so I'll stop.
Supervisor Sabatier?
Thank you for bringing this back, and I'm glad that it was pushed from last week. I think it gets confusing, especially this conversation that we've just engaged in, because now we're talking teeter and direct charges out of teeter, when really we should really split that apart and not confuse about where we are today. And I mean, I think part of the confusion is there's good intentions behind the comments, but sometimes it gets misconstrued. I'm reading right here of a note for Lake County Fire Protection. This is the total teeter distribution for Lake County Fire Protection, where the $103,000 will be withheld to mitigate budgetary impact. I don't think that's the correct statement. I know you and I spoke. The concept is, upon paying teeter, there will be a parallel track of getting back these direct charges. And so we are not going to reduce anyone's property tax apportionment, or whatever you want to call that.
Right.
That will be whole. The direct charges will be a separate path, but at the same timeline of when it is that they're going to be requested or reduced from some other payment. For example, if they're getting direct charges, it could be reduced from the direct charges they're going to be receiving. Again, every agency is going to be different, because some people don't receive anything. It's kind of sporadic. It may just be a lien. I'm guessing maybe special districts through a lien. I don't know that they have direct charges. We pay the bills. That's a different situation. And so I think each one's going to have a separate process. Now, I know that, so I think that's step one, is teeters, like, just, it should be as far away from this conversation, because I think it's confused me and it's confused a lot of other people as well. The fact of the matter is, and actually I got one more question before I get to that. So we gave away $2.138 million that we are asking back from all of these agencies. That is the total amount that's at the bottom of this spreadsheet. Where did that money come from that we gave them?
The teeter fund?
So we paid direct charges with teeter?
Essentially, once, go ahead and.
I was going to say, in this particular scenario, if you're asking where the erroneous payment came out of, what fund it was credited from, it was teeter that it was literally credited for. Yeah, because that's the way it was coded with the county software. I mean, so if it helps, it could just as easily have come out of another fund. It's just that it happened to be paid out of that account.
Because that was the appropriate place to recover the 1%. So we bring the teeter in to cover it, and then it's like, oh, wait, only a portion of this is supposed to be covered by teeter. Here is the remaining portion that is not. And so because it's, yeah,
I don't like that answer, and I hope we can find a way to not do that again. Because teeter's supposed to cover a certain thing, so if we're covering somebody for, let's just say, $500,000 because we didn't do our apportionment, we think they're owed $500,000, we give it away, well, that hits the teeter, which is supposed to support every single taxing agency to make sure it stays whole, but gets interest and everything else. So I'm
This is all in one bill.
I'm gonna pause right there,
Right.
but
so just so we're clear, it's all the 1%, the part that is and isn't, it's all in one bill. It's all.
until we're asking for it back.
Yes.
And then this is where I'm gonna get to the part that you and I spoke about that you may not be a popular fan of. So the $2.1 million, if we are simultaneously saying tax sales done, apportionment and calculations are done, here's what you are owed, we're done. We would already have the $2.1 million in our pockets because we wouldn't be asking for it back, and nobody would know the better because that's the process that needs to happen. Here, there's a 2 to 3 year delay because we're looking at tax sale 160 to 162, so it's been 3 years at the very least, and now we're having this conversation about 2.1. I think the teeter should be for the 1% only. I do not think it's a good idea or the potential that direct charges are taking from teeter, even though teeter is not meant for direct charges. That's very confusing and concerning. We have to get to the smallest of timelines between when the tax sale is done, if we do a deficit sale, to when the apportionment goes out. Because whether it's a public agency or not, I really don't care. It's a business. And if you receive money and you implement that into your budget and it's 2-3 years later, you don't have potentially that money if you've gotten hit by the economy, if you've gotten hit by an emergency. There's a lot of issues that comes out of that. So in my opinion, and this is not on any individual here, we are inheriting a problem. Let me just say that before. It's not about the individuals that are in front of me here. This is an inherited problem where we decided not to do something, where 1 in 4 property in the city of Clear Lake was tax defaulted and nobody was doing any tax sales. So the results, unfortunately, are now that we're being requested to do 1,000 because people allowed not to do anything and just allow a city to deteriorate, which is not fair and not appropriate for that community. We pay dividends for the past. Okay, we're haunted by the past. We have to deal with this. But we have to figure out a way to reduce and minimize that timeline so we never have to ask for money back, or as small of a timeline as possible with a fine print of please hold this for 6 months. We may be changing the formula and figuring out that you owe us something, but if we don't communicate and they don't know, they're going to spend their money. And about $825,000 of the $2.1 million is in District 2. It is one of the poorest districts in the entire county. You go to Lakeport, they're barely touching $10,000 worth of stuff because there's no tax defaulted properties. So the areas that are screwed by tax defaulted are the same ones that are having to deal with this. So I've looked at all the rules and regulations that have been sent by our attorney, that's been sent by the city of Clear Lake. I don't see anything that says we can't recoup it. I'm glad we're recouping with some years in there rather than all at once. But to me, the future is so much more important on how we don't do this ever again. And I hope that you can bring us back some options, because I know Megabyte is part of the problem, and I'd rather not spend $10 million for a new software that can do what we need to do just for this. What can we do to help minimize that timeline, because it is not fair to the people that are going to speak. And then we have this, which is kind of an uncomfortable situation where it's not really right to say you can keep the money. It's not really wrong to say you can keep the money, but at the same time, like, this should have never happened in the first place. We've inherited a problem, and we can't allow it to continue just because it is what it is. It does not mean we can't make change to it. And so I am urging us to bring back some options to resolve the software glitch that we have that creates this situation and minimize that timeline. And I'll stop there. And it's unfortunate, but I think we need to enhance our communication by letting them know that this may have a clawback and maybe put a timeline on that. But we need to set ourselves at a higher level in order to make sure that our partnership with these agencies that provide water, that provide healthcare, that provide education, do not get the same impact that we're seeing today. And I'll leave it there.
Just if I could address a couple of points. I do want to just mention that the other option would have been to not distribute the actual the good money. And so, yes, we would like to know on the front end how much is 1% and how much is direct, but that is, it takes a few hours to calculate each one. And so, that is something that we didn't know ahead of time, and we would have had to hold the actual collection, the actual distribution until the end. And so, we 100% don't want to relive that, and we do want it to be better. But I also need to know, are we looking at a wholesale fix? I mean, am I supposed to prepare myself for 200 and some odd deficits? Because that is a lot of staff time that I don't have. Like, we're not staffed for this work. We've been trying to absorb it, hoping that the county is coming up with a resolution to fix this going forward so that we don't need to prepare for constant deficits. And so, I guess I just wanted to add that. And so, yes, we absolutely want to be more efficient. We never want this to happen again. But I also hope that the county is going to take some action to make sure that we don't have this situation again where we have this unprecedented situation of 257 deficit sales in a short period of time.
And I just want to respond. We have. We found a way to reduce in our last conversation where we killed the low-value ordinance because there is a potential short-term, we didn't say it's the long-term, but a short-term solution. We continue having the conversations with the agencies that want to work with us in order to resolve the low-value property stuff. And in the long run, there's going to be some that fall through the cracks because it's impossible to build. Those properties will exist. But currently, those are viable opportunities for economic development, and to have a low-value ordinance would kill it. I'll leave it at that. That will reduce the future as long as we stick to the plan that we said that we would go with. And I don't see anything that has suggested that we're going to deviate from that path, or else we should have done the low-value ordinance. Like, it wasn't meant as a delay tactic. It was meant as a solution to the problem, which cascades into what we're talking about today.
Supervisor Crandall.
Yeah, just quickly, is there a way we can, like, in case, however this goes, you know, when you come back and when we move forward, is there a way we can do like a joint letter to, like, you know, just let the state know and ask for relief for legacy deficits caused by these circumstances, possibly? Like a letter with the districts and a letter with the cities, something like that to, you know, to the state, or whoever's specifying this to us according to the code.
And what are we at? What would be the
Just the fact that we would like to basically absorb this as a sense of relief, because we have, you know, we have some of these districts, you know, I'll speak to the fire districts, you know, there's always a situation where they're underfunded, so I don't see a problem with absorbing it when it comes to that. I'm just asking for this to see if there's an option to do that, I don't know, in the future, or if there's something we can look at like that.
One thing that I can say is that I don't know, in direct reference to the relief you're asking for, I'm not 100% sure, but at the state level, when legislation was raised, for instance, by my office about offering additional options, there really wasn't any buy-in about, and this is about tax sales in general, providing more discretion, like giving us the ability to deal with the fact that we have this weird, unique situation. Statewide, the other counties were against it because no one else is really living our issue. So I think if you're asking for particular relief, I mean, I know it's come up in other contexts, like that some of this land could be converted to parks or other thing, and if you're looking for state money to do that, or if you're looking for state money or additional options in any way, that would probably have to be a county-specific bill that you would bring through your legislators. Because I can just say in my experience at the state level, no one is interested in our situation because we stand alone. So I just wanted to share that. And just one other piece to address the point that was made earlier. We did bring that fix back, but obviously when we came up with that fix of not needing the low value ordinance and doing the bill cancellation or discharge process, that was before some of the points that have been raised now are in existence. So for instance, like a theory that an error can't be corrected in this circumstance, if that situation were to be the case, then everything we just talked about is not necessarily in play anymore. This would be an entirely new situation in terms of the property tax framework in California. So yeah, like at this moment, I don't see a reason why that can't continue. But some of the points that have been raised would really call that into question. That is an entirely different environment than what we just talked about.
Yeah, and then it's going to be, kind of like we talked about earlier, it's going to be our fiduciary duty to then bring it right back to you at that point. So, or kind of, you can tell by the low value plus what we're talking about here is some of these things are interconnected and some of these things box ourselves in as we don't make the one decision, we're boxing ourselves into another financial decision. Because we either have state controller's rules, or we've got property tax rules, or we got generally accepted accounting principles, government accounting standards rules, all these different rules that box us in already to do certain things. So each decision you guys make will send us down a different path.
Okay, are we ready to hear from the public? Yes, I'm going to go ahead and open this to the public. You come forward and state your name. Whoever's first, state your name for the record, please, and you'll have 3 minutes.
Hello, my name is Frank Costner. I'm the General Manager of Conocta County Water District. Thank you, Chair, Supervisors, for having me here today. So Conocta County Water District, we're a water district in the city of Clear Lake. We're going to be severely impacted by this. It's $95,000 that we're going to have to pay back. We do a 5-year budget. And so we do our rates are in a 5-year period, so we can't raise rates again for another 5 years. And so, this is going to be a big impact for the district. Also, we count on that money, and it's usually pretty stable. We get about $30,000 to $60,000 every year, and so. This is going to be $95,000 over 3 years, $31,000 a year is going to really impact us. And so one of the questions I have is, it's very confusing, you guys have been talking about it for a while, it's confusing as heck to me. And so how could we, one of the questions I have, and I know you guys really, there's going to be lots of questions, is how can we be sure that that's correct? We're not, no offense, but like, it's very confusing, and it's just another thing I really is why wasn't the district informed sooner? It seems like this is something you guys have been talking about for a little bit, and it would have been appropriate, I think, for the district, for my district to be able to. I know you guys do your agendas and whatnot, but just since it's something that really impacts us, it would be really good for us to be informed so we could be and I thought that the payments were going to be spread out to 2 years. One of my questions is, could and you were talking about that, could it be spread out longer? And how could we be sure that this is not going to happen again? It would have been really good that if we knew about it, something was going to happen, 3 or 4 years ago, tax collector was saying, hey, this could be an issue. It sure would have been nice to have that calculation done. You know what it is now, so it's a concern to me that it would have been good. And then moving forward, and this was answered, can we get the software to calculate the tax loss? So when we're selling the deficit properties, that that's calculated in there. And then my last question is, you know, are the deficit sales back to normal? Is this something we're going to be experiencing now for into the future, or can we really count on that money? And so it's really good to put a name to the faces on everybody. Thank you.
Thank you.
for having me.
Next person.
Hello, my name is California Howland. I'm with the Cobb Area County Water District. And after hearing some of the numbers today, ours is much, much less, but still the concern for paying it back. And the panel earlier mentioned revenue and taxation code. And I'd like to reference section 55222.2, where it says, claim limitation period overpayments from levies or liens. A refund of an overpayment of any fee, penalty, or interest collected by the board by means of levy through the use of liens or by other enforcement procedures shall be approved if a claim for a refund is filed within 3 years of the date of an overpayment. So does that statute of limitations apply?
Hold off. Let's finish public comment.
Again, one of the districts, I'm here representing two districts, Cobb Area County Water District and the Adams Springs Water District, which was dissolved in 2018. So if we're inheriting their debt, I believe that 3-year statute of limitations would apply there as well. I just looked this up because I came here prepared to talk teeter. And apparently this is not to do with teeter, because teeter says that you can't go retro, but if the county were to overpay through teeter, they could then collect in the future any overpayment. That's all I have.
Thank you. Next.
Good afternoon, Chair Rasmussen, board members. Alan Flora, City Manager, Clear Lake. To be honest, listening to the discussion, I'm not really sure where to start at this point. You know, it would be ideal to be able to have a discussion about some of these things. I would say that there's a number of things I've heard that, you know, the city certainly disagrees with. I think the most important thing that should be raised that is a real failure here is the communication about this issue. It's been raised a couple of times, but the way we all found out about this, you know, I think really is just unacceptable. I don't believe, with what I understand, that teeter can be removed from this discussion. I think it came out in some of the answers today that teeter was part of the overpayments. It was used as a funding source for the overpayments. And you know, I heard two different things, so I'm not sure which one is right, but based on the agenda item and the sample letter or memo to be sent to the city of Clear Lake notifying us of a reduction, it says the first payment will be withheld from the December 2026 teeter distribution. And so it feels like I'm hearing two different stories. I think teeter is involved here. There are a few exceptions in the revenue and taxation code that allow a clawback from teeter. I understand that. I adamantly disagree that this is one of those. And there's a lot of talk about low value ordinance, all these things. The problem here is the county has a software that cannot calculate a deficit sale. And I don't understand how that's okay. You know, I understand that there's a lot of work that I don't understand that goes into the background of both the tax auction and these calculations. But we're talking about a few hundred deficit sales, it sounds like. I mean, we got Excel spreadsheets, we got 10-key calculators. There has to be a way to calculate this instead of giving us the money and then years later withholding our teeter funds, our regular distribution. And just a point of clarity on this, you know, we're being notified that we're subject to over $200,000 being withheld. In asking questions about this, I found out that we already have had $306,000 withheld from our teeter distribution, which I don't think was legal or appropriate. And the tax loss reserve fund, from what I understand, is specifically made to help deal with this problem. I found a PowerPoint presentation that was given to this board by the former auditor controller about the teeter plan, and there's a slide on there that says the tax loss reserve fund is to handle deficit sale issues. I still haven't had an answer to the question that we posed last week related to the revenue and taxation code, but we have to do better than this.
Thank you. Do we have anyone else in the room?
Good afternoon, Board Chair and Board of Supervisors. I'm Conrad Colbrandt with the Redbud Healthcare District. I'm the general manager there. We had no idea this was even going on. There's been absolutely no communication with our healthcare district until I heard about it from Alan last Wednesday. To have this coming down the pike with no communication and no transparency, and as like Frank from the Water District said, how do we know this isn't going to happen again? How do we know? I mean, maybe you're going to do 1,000 tax sales this year, or 500, or who knows how many. How long is it going to take to work that through? Clearly, this county needs to get new software, period, and stop. It takes a lot of time, but when you go in for a tax sale, every single thing has to be automized so that you get that starting bid number. And so we know that's been done, and we know the dollars coming in. I'm hearing it takes a long time to figure that out, but it shouldn't. And it's not fair to the districts. We're the healthcare district. We're not going to be impacted too badly. I think we have about $13,000, so divide that by 3, $4,300 a year. It's not going to kill us. But when you're talking fire districts, the city, I mean, first responders getting whacked with over $100,000 a year, I mean, and they're trying to buy fire trucks and ambulances and everything else. I mean, the whole idea of the teeter was to balance it out, let it be smooth. Even if you just paid the 1% and kept back the other, and then until you actually figured it out. I don't know if you can do that, but your computers have to do something better. It's really difficult. And a lot of it, even though we're not going to be directly affected tax-wise so much, because I'm hoping that appreciation on properties will go up, and so it'll kind of wash. Maybe we'll still get a little bit extra. But some of these special districts, like the fire departments, the schools, the hospitals, they come back to us, the city. They come back to us and say, hey, healthcare district, can you help us backfill? We need to buy a new fire truck. Can you help us with $200,000 for that? Or, we want to buy these portable hydrants that can be used all over the county, that they can pump water out really fast and fill up a water tender in 3 or 4 minutes. And so that comes back to us. So we are affected, even though we're not directly affected. We're going to have more and more asks coming our direction. So, basically, if this is going to keep going down the road, you need to spend the money for the software and do it right, because it's not fair. And we'd really like to see better transportation and better transparency and better communication, because so far we've had none. We've had none from the County of Lake. Thank you.
Thank you.
Hi, good afternoon, Board. Diana Mann, General Manager, Clear Lake Oaks County Water. I'd just like to echo what's being said already. Nobody even knew about this happening. It sounds like it's been in the making for quite a while that you guys have been talking about this. And the only way we found out was through Alan, which makes me question why Alan was known about it. None of us were. So I guess that's for a different conversation. But again, $35,000 to Clear Lake Oaks doesn't sound like a lot when I looked at the fire departments of $200,000 and plus. But we are so small, and we depend on every penny. When we make a mistake, we eat that mistake. We don't go back to our customers and say, oh, sorry, we forgot to bill you for the 5 years. Now you owe us X amount of dollars. So my question is, maybe echoing EJ, is there another fund out there that Lake County or you guys can dip into to offset the burden that's going to be put on all of our special districts and fire departments and healthcare facilities, because we can't even make our bills right now sometimes. And so when our customers don't pay us, what do we pay with? And now we have the county taking money back from us. We're getting it by both ends. My little district's carrying over $400,000 of delinquent payments. And yet we still have to pay all of our bills and meet every one of our payrolls. and pay all of our insurances. But then the county of Lake says, oh, sorry, I made a mistake. I think you guys need to be a little bit more responsible for your mistakes. Thank you.
Thank you.
Good afternoon. Been a long time since I had to get up before Board of Supervisors, but my comments are, when this teeter plan started, I was one of the initial ones that got into this with the county. At that time it was Betty Emmons. I don't know if anybody ever remembers her, but we went into this with the assumption with her that we would get our tax base, and the teeter plan, when they sold off the delinquent properties, would go into a fund to help pay for those taxes that weren't paid up until. The other thing is those delinquent properties that we've got on the North Shore, and we've got a lot of them, like the city of Clear Lake has. They're paper subdivisions. They've been sitting on those for years and not getting rid of them. As EJ knows, there's a couple of places down the street from me, 2 doors down. The property owners have been dead for 40 years, no living relatives, and they just keep adding the taxes onto it. Now the taxes are probably worth more than the property is. They're probably over $40,000 in taxes. You know, and you sell it off for 10 or 15,000 to somebody, and then you're losing that money. Why aren't those places sold off? When the 5 years is up, is it 5 years? Put them up for lien sale. And then they're talking about only selling off 5 or 6 of them a year. Those things need to be sold off as soon as they come up, instead of sitting on them, because you're just tacking taxes on top of taxes on top of taxes. You're not getting anywhere. Now we're in a big rut here. The fire departments, and I can speak for them, I think, some of them, you take $50,000 or $100,000 away from us, that's a fire engine down payment. Those things cost anywhere from $500,000 to $600,000 now to replace. And our fleets are really old, most all of them. And like he said, we have to go out and borrow money, or, you know, hope somebody will donate money. Every time you take it away, we got to pay them like everybody else. We got to pay employees and everybody. I just wish the Board of Supervisors really take this under consideration before they make a decision about this. Thank you. No, James Burton.
Thank you. Do we have anyone else in the room who wishes to speak? Not seeing anyone online, Johanna? No hands. I'm going to bring it back to the board. Our auditor, tax collector, do you have any information to offer on some of these questions that came up?
Let's see. The one thing I just want to say is I apologize for the language I used about withholding from teeter. My intention was to make it easier. Otherwise, we have to bill, you have to budget for it, because the teeter distribution does incrementally increase a little each year. The reasoning behind saying it that way was to try to mitigate the budgetary impact. So I take full responsibility. I apologize for miscommunicating and saying withholding from teeter. The negative apportionment will come directly from the account where the direct charge is mapped to, and we will not be withholding from teeter. And again, my bad.
I was just going to speak generally to some of the points that were raised, especially those that relate to the tax sale, because I think there's just important background for everyone to have. You know, I do understand the frustration about why these properties don't sell. And I think one commentator noted, why don't we sell them after the 5-year mark? Just so we're aware, I mean, without even really getting into the paper subdivisions, all those lots in the hills above Nice and Lucerne, 78% of the properties in one of our auctions receive no bids. You know, no one will buy them. The only way to sell them, and if we had to go through and sell all the paper subdivision lots, would be to crash that price down, which will lead to the biggest deficits we have seen yet. So, I mean, as much as it sounds like an easy solution to sell them, it really doesn't work for us. In the meantime, districts continue to add direct charges to lots that are upside down, where already the tax burden and the direct charges vastly exceeds the value of the property. So, yeah, the problem does compound. And I think the issue that we have, again, not to take it back to the low value lots, but we sort of stand alone in this, that other jurisdictions don't tax these. They don't take them to auction. They don't put direct charges on them. And there's even a difference between the direct charges that are in here. I mean, some of these, when you look at schools, for instance, that's based on valuation. So they recover that in their bond rate. I understand some water districts, may be able to recover it in future rates, but I think I had someone point out that they only do a rate study, it sounded like every 5 years. But there are some on here that are liens that don't have the opportunity to be recovered at all. And so I think what's important too when districts look at this is when notices go out about the tax sales and what properties are going to be on, there are some systemic issues that I think ultimately the county, no matter what solution is ultimately come up with, won't be able to solve because none of those solutions are really going to be applicable to these low value lots. There just won't be an option that will work in the end. So I just want to highlight that I think understanding where those delinquencies come from is important. There is still delinquent secured debt that's recovered in the auctions in some cases, but especially in these areas where the level of delinquency is high, it's not going to be a meaningful amount. And I just, as long as we have the systemic issue, as much as we can try to find mechanisms that may speed up processes here, there's not really a great resolution. It was pointed out software. I just wanted to highlight there is no software, at least as it stands now in California, property tax software that does this. Megabyte's actually one of the better ones because we were able to get software that helps on the front end. Really more benefits my office, frankly. But the software we have is one of the more sophisticated ones. And again, I just don't know that there's a market to get somebody to do different software because our problem's unique.
I was just going to jump in on the software. So going back to the point I made earlier is Megabyte is, I think it's 33 or 35 counties out of the 58. It is the prevailing software for California. There is pretty much like no other, unless you're one of the big eights that you're building a system on your own, and it's millions of dollars just to develop from scratch. And to let everybody also understand, the public especially, is this software covers all the property tax processing in my office, so 65,000 basic parcels, plus all the other stuff we do. Then a whole chunk of what the tax collector does on the tax collector side, and then everything to do with direct charges and property tax on the auditor side. So this is what we're talking about is a very small piece of all the things Megabyte does not to defend Megabyte. It really needs a module is what we really would like to see from Megabyte, is something that fixes that process. The other point I wanted to make was going back to kind of generally accepted accounting principles is just because, to kind of defend Genevieve for a second, is just because things were paid out of teeter, it does not, accounting rules and accounting concepts don't allow that to change the nature of the funds. If the funds were not what is in teeter, in this case, the 1% property tax, because that's actually tax, everything else is a direct charge. So if it's not property tax, but she used the mechanism just to go through that account, it does not mean it's teeter. It does not change the nature of that account or funds. That's a basic finance kind of accounting rule. And so where it looks confusing, and it is confusing because we're talking about a lot of steps and a lot of processes, it's kind of clear to make sure we say that is not just because something goes through teeter and she just happened to choose teeter because historically that was the way it was done, and she'll change it in the future. It does not mean it was teeter related.
Well, and to add to that, thank you, that part of it was covered by teeter. And so, to some of the comments like, well, why didn't you just pay the 1% and not the directs? If that were possible, I promise you, we wouldn't have spent all the time we did. It takes a lot of calculation to figure out how much was paid and how it's prorated against all the charges that are there, and it's one property at a time. It all comes down to exactly how much was owed, the codes that govern each of those codes, and then again, how much was paid. And so there was no fast way to do that. And so something I do want to point out too is, deficits, yes, they occur. It's normal, like a couple here or there. It's not, it's something I don't know that we want to have a whole big process around. We lose a lot of money when there are deficits. So that means that we're selling a property at less than what it's valued. So that should be sort of, I don't know, a rare occurrence, not something that we have all the time. I don't believe we want to plan for that. So it's just something to think about. And to point out, I'm not defending Megabyte. There is a module that is supposed to help with deficit sales, and it doesn't work. But because this is such a rare problem, we don't have a lot of county support to force them to make it work, because we're kind of alone in this. So.
I would just add that, yeah, they do offer a tax sale module, but because our situation's different, they don't account for deficits. Question's been raised, but at this time, I don't see that happening.
All right, Supervisor Sabatier.
Yeah, there was a comment, and also looking for, and I know that it's kind of a awkward situation because I'm looking at 3 elected officials, so our consensus can either be followed or completely ignored. But I'd like to get consensus from the board that we would like to find out what are the options to shorten this timeline, to make sure that we can try and not create this weirdness that is part of this conversation, because I really think it's important to try and fix the future while also talking about the past. And I'd love to know if the board is in concurrence that we do want to hear some options and have that come back to us so we can see how we can support our financial team by having the tools they need to continue to have healthy relationships and not these weird situations where it feels like there's some antagonism going on between us, and that's not what I want, and I want to support that, and just looking to see if there is consensus for that.
Supervisor Pyska.
Well, do you have, what does the future look like right now?
Well,
We've got some fixes in place. We've got an ordinance that we're not talking about right now, but.
I know I have 36 more that we were just notified, so we're going to be working through 36 more deficits. I don't know what else is, so that's where I don't know what else is coming. I know without as long as the low value bills go out with an undefined amount of charges that can be added, I do believe that this will still be a problem for the future. We learned a lot through the process. I believe we'll be able to do them a little faster, but it's the volume is what it comes down to. If there are 5, we can absorb it. I believe we'd be able to take the chart, do the calculations, and wait to distribute until we know exactly how much we should be distributing. When there were we didn't have that opportunity when we were hit with 200 and so forth. You can't tell. And again, we also don't want to hold on to the good money that we should be distributing for this undetermined amount of time it took us to calculate. And so going forward, all I can really say is it depends on the volume. If it is a reasonable volume, I imagine this will go pretty fast and that we would be able to do the calculations before the distribution. If I'm hit with 200, I can't say. I guess we would have to discuss, would I hold all the good money for as long as it takes to calculate, or do we beef up the staffing? It is something that I've considered if we don't have a long-term fix for this. My office isn't staffed to do all these deficit calculations, so we've been trying to absorb it in the hopes that we have this wholesale county fix that would stop it from happening in the future. So that's the best answer I can give right now. So.
I would just also add, if you think about the whole inventory, last I looked, I think there's about 3,500 properties or so that are under 5,000 that are eligible for the auction now. I would anticipate that all of those, if we were to list them with the intent to sell them, would have to be sold at a steep discount. They would all likely be deficit sales. So that's, I think to answer your question, it kind of depends on which way we ultimately go in this. As long as we're trying to keep these on the roll, which I know is something the city has wanted. I think it's helpful for the fire districts because it allows us to continue to to continue to do the direct billing for them, to try to satisfy these other requests, they're staying on. But all roads one day lead to a deficit sale on every single one of them. So that's one of the trade-offs, like in trying to do, trying to satisfy some of these requests at the moment. Ultimately, we're headed for a deficit unless we take some other dramatic action, deficit discharge, the ordinance we're not talking about, things like that.
I was just going to ask one last time, our tax loss reserve fund, we have one in place, or, right? And so what, can we look at possibly if things, like when we look further into anything, if that's a way to absorb, or?
Well, it did absorb the 1%.
Mhm.
So if you're asking for it to absorb beyond what the county has approved, that the county would have to.
So my understanding on that is we'd have to change the law that was implemented in 1996.
And I don't know
To-
if that would be retro.
I'm just.
Yeah,
interrupting
that
you
would
now.
be.
It'd be now, yeah.
That would be correct. My understanding is that you'd have to change that, and then there's different calculations for that teeter portion, either 1% of the total roll or 25% of the delinquency. Direct charges aren't baked into that number right now, so the amount that lives in the teeter fund is only based off the 1%. The board would have to pass that resolution. We'd have to restructure the fund. That's pretty rare that counties do that because of the situations we're talking about right now, especially if you didn't have a low value ordinance. I don't know of anyone that would ever do that.
So you said there's 36 properties that you have to calculate right
The
now.
most recent sale, I believe there were
coming auction.
36.
Is in the coming auction, there were 3 in the last, so I think it's,
There were 30.
maybe, I don't
Okay.
know. We'd
I
have to
was
look at
told
it.
36 were coming into my drink. So anyway, my understanding is I have 36 deficits to calculate. Well, confirming that because it just recent information.
And that's up until we have another sale, and there could be more.
And that's potentially coming up soon.
And then, do you have a number on this chart we're looking at for this 2.1 million? How many properties was that?
257.
Okay. Supervisor Sabatier?
Yeah, a couple of things were stated, and I'm wondering maybe if we can ask Mr. Guintavano to speak to it. I know I looked up revenue, I believe it was 55222.2. That one seems to be a refund of an overpayment of a fee, penalty, or interest, not an overpayment. So I think that's slightly different. But that's just my reading. But I'm wondering if you can speak to some of the comments that were made about some of the legalities of the clawback and so on and so forth.
Go ahead.
Thank you, Mr. Chair. So just generally speaking, 55222.2, yeah, it wouldn't apply in this situation, my first reading of it. As to the authority of the auditor to make what is essentially his corrections, right, to the roll, more specifically, we're looking at Revenue and Taxation Code 4832 and 4834. That's the mechanism by which corrections are made by the auditor controller.
Can I jump in here a second?
Yes.
I'm going to go back to the previous when you're asking about, or at least the way, I'll tell you how I interpret it, and I haven't done any homework on this, but if the teeter is only the taxes, right? Not, you have to always think about the tax bill as two sides, direct charges and then the tax, the 1% on the top, right? So if the teeter only represents the 1% and you've got a deficit of a couple $1 million, but it doesn't represent the direct charges, you can't go back to that 1%. You would have to almost do some kind of other payment mechanism to get it whole. You could start from this point, like she's described and Patrick's described, of changing the nature of that to include direct charges so that anytime this happens in the future, you could then have the nature to go back per, kind of like we talked about the matching principle. It's the nature of that fund. You can go back to direct charges, you can go back to the 1%, property tax. But at this point, the nature of those funds is only the property tax. So you can't go back to that fund, my understanding is, and it's kind of backed up by generally accepted accounting principles, is you wouldn't be able to go back to that fund and try and glean or make whole the direct charges, because it doesn't have it in there. It doesn't possess the nature of that. So you'll have to make it whole in some other way. Either you guys do some budget measure, some other variation where you say, we're going to cover this, but it won't be coming out of the teeter, is my understanding is.
Does direct
Am I
charges
right?
include penalties and interest?
I'll let-
Direct charges contain penalties and interest, or is that?
No, it's added on top of. It's part of the calculation. So penalties and interest will accrue on the whole amount owed. So direct charge is a flat rate that is put on by the agency. The 1% is what is dependent on the actual value of the property. Everything else is just flat charges added on top.
Okay.
Well, and that was my understanding of what Mr. Ford was just speaking, that if we wanted to do something with this, it would have to be another fund. It can't, like, we can't override and say that we're just going to forgive this. That's my understanding of the law.
You could probably forgive it, but you're going to have to do some budget.
Well, that's what I mean. It would have to come out of a different
Yeah.
budget, is my understanding. Supervisor Sabatier?
And while I empathize with the agencies, I think forgiveness creates a weird precedent of, I'm going to go back. I didn't hear concurrence. Is there a denial of concurrence to ask for how to solve this in the future? Because what I heard was, we'll see. And that's not an answer to me. If you're saying, I'm going to try to have an MOU with all these agencies that I can have a year to figure out this format so I can pay them, and we've approved that I don't give you the money until we're done, that would be one potential solution. I don't know. But like, I don't want to put you on the spot for options, but I think we need to talk about how to fix this in the future, because this is not just paper parcels. A piece of property on Highway 20, which crosses both District 2 and District 3, sold at it's a $700,000 property. It sold for $170,000 as a deficit sale. It was an old mine. So, I mean, it's not just paper parcels, it's other pieces of properties. We're gonna have to figure out how to make sure that we can do this without having the negative impact to all the parties, and what's the best solutions. And I still haven't heard concurrence, and unless I hear denial, I'm going to keep asking, is there concurrence to ask for options?
Yes, from me, I don't.
I will be asking for more staffing. If the county doesn't have, doesn't come up with a solution to prevent this, the numerous deficit sales, I will just need to ask for the staffing to make sure the work can be done timely while keeping up with our other deadlines.
Well, I don't know the answer to it at this point, but yes, I don't want this situation to happen again. We got to figure this out, but I don't want to be here next year when we've paid out more than we should have. So
The only
there's
thing
work-
that I could think, sorry, I did not mean to cut
no,
you
it's
off,
okay.
but I do want to just, I mean, the potential for an additional year in the repayment, I mean, that is something I think as a county, I mean, because I did hear a 5-year budget cycle and so forth. So that would be something that I would think that could be within our control to do if it's something we wanted to look at. But I mean, outside of that, I have no.
And I intended to pose that question too. Was there a possibility for 4 or 5 years? So I hadn't got to that yet, but hopefully did that answer your consensus?
Yeah, thank you.
And we have somebody that wants to speak again. You're wanting to speak again, City Manager?
If I could just have like 20 seconds.
Okay, go ahead.
Thank you, Chair. I know you don't have to let me, but so after I sat down, so again, there's 216,000 or whatever this to propose to be withheld. 306,000, a little bit over, was already withheld from us. Now, we heard from the auditor that this is not, the future withholding, however that works out, is not going to be the 1%, if I understand correctly. But it was on this last one.
Can ask for
This is the list of all them, at least the property tax receiving agencies, the 1%. So I'm wondering how that's going to be resolved.
Ms. Harrington?
I don't understand. Can I get clarification on the question?
Yeah, City Manager, can you try to clarify that a
And
little
I do
more?
want to address the amounts that were withheld prior, but I do want to know.
Well, my understanding of the discussion is that you're not going to withhold teeter payments. Our 1% distribution is not going to be withheld to claw back the 216,000. There's going to be another mechanism used. Is that incorrect?
Sorry, with those terms, I'm not clear. What I can say is that the 1% is covered by teeter. So in the event that the property sells for less than what the 1% is, we will not be clawing back that difference. The teeter will cover that. And some of the properties sold at less than even the 1%. And so it's only in the event that, we pay direct charges, and if they were not paid, that is the portion that is being recovered. And so the 1% is covered by the teeter, but I'm not sure when you say withheld.
Well, now I don't have the memo, but the proposed memo that you sent said that it was going to be withheld from our 1% distribution. And then later, you said that that was incorrect language.
Okay, so I erroneously said it would be withheld from teeter. And so that's where I did.
So you still intend to withhold it from our 1% ad valorem
No,
property
I intend
tax?
to align it with the distribution so that there's no cash flow issues for some of the districts that don't have the money at the other.
Okay, I just don't know what that means, I guess.
So what it means is April and December are when we distribute the teeter, and so I was planning to have the repayments align with the April and December teeter distributions, just to make sure that.
I just hope there's a way to have a productive discussion about this at some point.
Okay. Do we have anything further from the board?
Should I address the amounts that were withheld prior?
Yes.
Okay, so, now I'm going off the top of my head. So 2021, I came to the county in 2021. So we had just received the first 6 deficits, and then there were 26 shortly after. And it took us, I want to say, about 6 months or so at the time. I was working with my predecessor and the prior property tax coordinator, and we did do the distribution, and then they recovered the amounts, and I wanted to say it was within about 6 months from the time it was just distributed to when it was recovered. And so that was back 2021, 2022, and those original deficit sales, that is the amount that he's speaking about. And so yes, we had distributed and a journal was, and recovered certain amounts.
Supervisor Sabatier?
Yeah, just a quick question. So, number 162, which is what, tax sale number 162, which is what we're looking at to 2000, that we're looking at for the totals that have been put together. That's from 2023.
160 to 162, there's 3 tax sales, I believe, but yeah.
Am I incorrect that it is, at 162, is that on, in 2024 or 2023 that tax sale 162 occurred? I believe it's 2024.
Yeah, it's hard to say. They last so long, roughly.
I'd have to verify.
What I'm asking is there another one that will have this same impact from 2025 that has yet to be completed? And so it's more than just a number we're talking about, because all the way to 162 is only the year 2024, and we've had another one plus another one about to happen in a few months.
Yes, okay, so yeah, yes.
Yeah, so I don't really want to get into numbers too much because that's not part of the presentation. They didn't prepare it, so I don't want to commit to anything. But I know more recent sale was much smaller. It was, I think the ultimate number of deficit parcels was 3 with, like 36,000 or so. So it's a much smaller amount. But that is unusual. I would expect them to trend upwards again sharply in the future.
Thank you.
Anything further? Go ahead, County Council.
Thank you, Mr. Chair. Just briefly, just to confirm with your chair and your board that Public comment on this item has now been closed.
Yes, it has. Not sure if Supervisor Swati still has anything.
I just found 163, and that was from 2025. And I think it had about 525 properties total, and I don't know or 434 properties total. So much smaller, and I don't know what was pulled out and what was sold, because that makes a difference.
So, is there anything, this is a presentation at this point.
I guess the 3-year repayment is what I've proposed. Depending on what else is happening, I don't know if we want to entertain a longer repayment.
Well, that question was posed by the board. I don't know if we have consensus to see two of us
I
for a
believe
possible longer plan.
did we ask for, we kind of talked about 4, potentially 5. And I would say I want to give you that flexibility to work with each individual entity to figure out, I mean, hopefully it's as simple as just an email, and if it's more complicated, then I think that's just,
Well, it's like 30 emails and then 30 individual conversations. about the taxes.
I think it takes time to clean up some history.
Right.
It is, again, just the burden that we all have to deal with is our past supervisors and our past administrators and our past have created the issues that we have to deal with, and hopefully this will get cleaned up, and then afterwards we'll never have to do this again.
But I would like to have everyone on the same payment plan. If somebody wanted to repay sooner, but
Then
instead
let's
of
make it-
having 2 years, 3,
then let's
instead of
make
trying
it
to
5.
manage, because we're not collections. So if there's consensus, then I will rework this with a 5-year repayment plan.
Yeah, you just got
Still
it.
aligning it with April and December, just for unknown reasons. And then we would just move forward, and I would go ahead and send out the communication. I will fix my language. I didn't want to change the language from one week to the next, so I left my error in there. But I'll fix it before it's actually sent out. And then if, I'm good with that plan. I just want consensus. It's a little bit outside of,
Well, we have consensus on that item. And then there was a previous consensus that I think you heard.
Yeah.
Okay. So is there anything further you need clarification on from this board at this time?
No, I don't think so.
Not hearing any, then I'm going to go ahead and close this item. And I need to call a short 5-minute All right, I'm going to call our meeting back to order, and we're going to move to our 6.9, our 1 p.m. item, which is consideration of requests for board direction regarding Community Development Department loan repayment plan and adjustments to ongoing operations. We have our Community Development Department and our Budget Office here with us. And you're going to start, Director Turner?
Yes, thank you. Oops, excuse me. Mireya Turner, Community Development Director, and I will turn it over to Deputy Administrator Shannon Walker-Smith. Thank you.
Good afternoon, Board. Thank you for having us back. Thank you for your patience with this process. This presentation is a conclusion of a deep dive into a complex problem. And this presentation in particular is focused on the detailed options you requested from us at last meeting. I want to acknowledge that there is a lot of data in the previous presentation, which was posted and previously and again with this presentation. I'd be happy to answer any questions about any of that material, and I'll certainly walk you through the fee analysis work. But we're going to move forward from that point in the presentation and focus this presentation on next steps. So with that, I believe, next slide. So we're going to start by talking about the remainder of this fiscal year and what we have concluded. Next slide. And I'll pass it on to Casey Moreno.
So this slide is a representation of the cash that is in the building division as of February 26th at 8:02 a.m. So this first one shows the loan, which was approved in November. So the $290,000 was transferred. And the second chart shows without the loan where they would be. So as of that point in time, they would have had negative $61,000. This also shows that the actuals that have been brought in since September have resulted in a negative amount for that month. And so they're spending more than they're bringing in each month.
So after quite a lot of work looking at what our options for the remainder of this fiscal year would be, we have determined together with admin that the building division will be unable to make a loan payment this fiscal year. That is mostly having to do with the fact that should we make a loan payment, we're going to set ourselves up to be in this same situation at the beginning of next fiscal year, which we would like to avoid. All of the building budget options presented here today for 26-27 include a $130,000 loan payment in 26-27, and that would be with additional 2 years going forward to complete our loan repayment. Based on the need to rebuild the building division reserves, splitting the loan payment over 3 years is the best option for the overall health of the budget. In planning, we have 2 options to present today about ways to bring down the deficit, the $500,000 deficit that was created in planning through the removal of the building contribution for this fiscal year. That was $375,000-ish, and the $105,000 in salary increases due to the new MOUs. So we'll cover how much of that deficit could be reduced with our options that we're presenting here today. The remainder of the deficit, as presented in the mid-year budget, would be covered by the general fund. So a lot of what you're going to see here today is based on fee analysis, and I know there's some questions about that. The fee analysis that was presented in the last presentation was a model, and it was based on 24-25 actuals. The fee analysis being presented to you today has been adjusted to reflect current MOU rates, which is based on 25-26 actuals. And those actuals are included in the calculations for the potential option 2 and option 2 fee increases as well. So they're current and up to date. Permit revenue projections are based on conservative permit numbers that reflect our concerns about what looks like an economic trend downward in our county, and also just the general year-to-year variability of permit types and annual construction costs, basically numbers and types of projects that come into the building department. Oh, yeah, sorry, Johanna. Oh, you're in control. Great. So not quite there yet. Oh. Okay, we'll go to this one. We have created 9 budget drafts in order to present this information to you today, all based on actuals. Of course, depending on what, options you guys want to consider, and whether or not you would want to look at one of the options we've presented in whole or look at some other combination of options, it does change the budget work. So these are drafts. And of course, all budgets are based on projections, which we have a lot more data to project on now. And I think we have much better projections, but they are still projections. So option 1 proposes no fee increases. Based on the fee analysis, we wouldn't take up any of the fee increases, and CDD would make significant staff reductions to address our current deficits. In option 2, we propose moderate fee increases based on a fee analysis, and CDD will still make considerable staff reduction. In option 3, we propose adopting fully unsubsidized fees based on our fee analysis, and CDD would remain at current staffing levels. I'll go to the next one. So a couple of other things just that we want to point out before we launch into the budget options. To more accurately illustrate the cost of our own internal administrative team in CDD, all of the positions in these budgets all of those positions have been moved to the planning division. We've done that because in previous years, our administrative team positions have been broken up between planning, and some have been seated in the building budget, which makes it less transparent and harder to calculate what our indirect cost is or what the cost of running the administrative parts of the department are. Moving them all into one budget allows us to then create a cost allocation plan for all 3 divisions to share those costs equally. So in the plan for this budget, building and code enforcement would contribute 1/3 each to the cost of the administrative team. The planning division has previously assumed code enforcement's share of that cost. In 26-27, these costs are appropriately distributed to each division. And the overall admin costs are unchanged. No changes have been made. It's just that what happens is that the net county cost in planning goes down and the net county cost in code enforcement goes up, demonstrating the true split of costs on our administrative team. I don't have slides for the fee analysis. They're in the previous presentation, but I will walk you through how these rates were determined. So When the board asked us to do fee analysis, we were not sure how to go forward with that. We talked with admin. We couldn't really come to a consensus about what format and what template to use for that. It seems that that is something that as a county we may be lacking. So we reached out. I looked at several other jurisdictions' models. The city of Lakeport had just done a fee analysis with a consultant, and they offered up their materials, and I used that as a model with an understanding that cities and counties operate distinctly differently, but the build up to how you calculate the indirect cost, the overhead cost, and the hourly rates all is pretty common and standard across jurisdictions. So typically fees are made up of, I'm still on fee analysis, but the fees are made up of a variety of parts. So first you calculate your indirect cost, which is looking at the administrative part of a department and how much that costs and calculating that against the whole of the department's budget. And that tells you what percentage it is that you add on top of your fees to cover the cost of your administration. The next piece is the overhead rate, and that looks at each division's operating budget plus their non-billable positions and calculates that as an add-on to the hourly rates. And then you take your billable positions and add the indirect, add the overhead, and then average those to get the department's hourly rate. So that's the model that we've used here. There's a little bit of a caveat, and that is that the building division fees, some are based on an hourly rate and some are based on what we call valuation or construction cost. So we have quite a lot of fees in the building division that are based on either 2.6% of valuation or 3% of construction cost. And that is based on a principle from the ICC. They provide a formula, and that formula is also in the Excel workbooks that I provided to you. But basically that looks at what is the total building division's budget, how much of that budget is meant to be brought in by fees, and in our case, that's 100% currently. And then how much project work is coming in. What's the total annual construction cost for all projects that came in a year? And then it divides by that and you get that percentage. That percentage is meant to be a single permit multiplier that is applied across all fee structure. And that's how you would make your division whole. We do break up these fees into a variety of different rates, which I will say later in the presentation. I think that that is a correction that we should make regardless of this conversation. We need to go to one permit multiplier, and we can have that discussion down the line depending on the direction we get today. Should I keep going, or do you want to ask any questions about the fee analysis?
Go ahead, Supervisor.
Yeah, I think this might be a good place to talk about fees and fee structure, because this is something that we talk about a lot. Every year we adopt our master fee schedule and we see fees go up and some fees stagnant. Rarely do we see fees go down, but it does happen every once in a while. But in going through your previous presentation and looking at the unfunded activities in planning, for example, I see Planning Commission. And it seems like that needs to be somehow built into the fee structure because those are driven by applicants. And generally, when we're looking at this department, we would hope this is a self-funded department, but we know that it isn't. And so the funding that comes from general fund is tax money. That's taxpayers' money coming in. And so we have fees and taxes supporting this department. And so looking at these planning fees, you know, I think it's accurate to be looking to restructure so that we are incorporating your overhead, the indirects, the planning commission, because those aren't things that the taxpayers should be paying because they're project specific. But then we're going to get into the conversation of our fees are too high. And so how does this board then justify potentially subsidizing those fees with taxpayer money? So I think it's just really important to, while we have this conversation, to look at where the money's coming from. Is it a fee? What is the structure? Or is this going to be supported by taxpayers and general fund? So this is a conversation I've been having with myself and Director Turner and other folks for the last several weeks and months. And I think planning is a really good example of kind of where we are with the current fee structure, not really working for the work that's supposed to be happening.
And when was the last time we restructured any of these fees?
The last change in fees was at the last master fee schedule, where there was a robust discussion regarding planning fees specifically, and we finally settled on a CPI increase. There has not been a in-depth discussion regarding planning fees for since I was started back here. Nor do I mean, it might have taken place in the 3 years I was gone, but I don't recall it really happening much when I was here before then either.
So just CPI other than?
Correct.
Okay. Supervisor Sabatier.
So I'm just going to take advantage of the fact that we're talking now to, I'm going to expound a little bit further than just the fees. To me, this is, we're so focused on the money and the budget that I think we're forgetting the purpose of the department. And the purpose of the department is to process permits and to process projects. And we are seeing a 3-year trend of less and less permits. I think that's where we should be focused, because we keep having conversations that we want housing, but yet we have a 3-year trend of it going down. So my suggestion is, I mean, I know that you did your best, and I mean no offense, but like the 3.1 and the 3.7, like that just, it sounds like an easy solution to a very complex situation. And I would like to, it sounds ridiculous, I even hate myself for saying it, I think we need a consultant that does a study for us to figure out what the fees are. What do we want to happen at this department? What kind of incentives can we add into our fee structure to get what we want out of that department? But our job is to get more permits to go through this department, because our communities are going to die if it keeps going on this trend. I think we have a much bigger picture issue than that. Right now, we just passed a mid-year budget. Whether we like it or not, your departments, your divisions are stable until June 30th at this moment in time. You've been given the cash flow to be able to continue. I think we get a consultant on board right away, and by next year's budget, we figure out exactly what our plan is and how we're going to make the changes that we need. And that could potentially be that there will be the need for layoffs. That could potentially be that we increase our fees. But I don't think it's as simple as how do we keep everybody, or how do we increase our fee or not increase our fees. I think it's a much more complicated situation than that. And I feel that you're giving us 3 options. Option 1 sucks. Option 3 sucks. So obviously we're supposed to go with option 2, which I'm not even sure that that solves our problems. So I want something more in-depth, something better than that. And I don't think we're going to get that today, but I want to give us till June 30th of this year to get some really expert understanding of what is it that we want out of this department and what do we need to change to really get that moving again, because that trend is what worries me more than anything else.
And I just want to follow up because that's what I'm talking about too, is the way that we're operating right now isn't working. We're having fewer projects come in, we're approving fewer, we're looking at potentially cutting back on the service that would bring us more permits and more projects. But we have to understand what the true cost is before we can move forward at all. And so when I'm talking about fees and general fund and taxpayer money, we may come to a point where we're being very intentional by figuring out how we subsidize so that we can attract more development. And that's really where we need to end up right now. We are kind of bleeding into this unintentionally, without intention, to keep this department afloat and to keep economic development afloat. But it's not, we're doing this, we're not being intentional about it. And that's where we need to be, is be strategic about how we want to invite development and how we want to provide these services. And I think until we get to that point, we can't really have a true analysis of how we move forward.
Yeah, okay. I think also, if we're looking at some of this, I think we need cannabis fiscal clarity. Oops. I'll say that again. I think if we're going further into what my colleagues are talking about, I think we need cannabis fiscal clarity. So we need to look at the expenses and what we spend, what time we spend, and what we earn in regard to that. We've streamlined the growers. We've streamlined the permits for the growers, and then 50% of the waiver is in place, the tax reduction. So let's look at let's look at how it looks without the 50% and charging them full, or enhancing their fees, or collecting the fines on these bad players or something in that nature. I'm just throwing things out there for if we're looking further into it.
Well, I mean, I think the fines is a really important piece of the conversation too, because you're going out and making these inspections and finding violations, but the fines have not been levied, right? There's been warnings given, and so, we really need to, if fines is part of our strategy, then we need to be implementing that too, because that is another way to pay back into the system.
Go ahead.
Thank you. I completely agree. This is a big picture moment, not a let's look at planning only, right? Like, this is all of the above, and in all of that, just like you were mentioning, the fines, or going a little bit more in depth on the fines. We need to make sure we invoice for the work that we do, but I also think that there is a place for our taxpayers' general fund to be there, because economic development is a bonus for everybody, not just the business that's being created. And so, I mean, jobs being created is a bonus for the community. So there's a balance. I just know I'm not the expert to make the decision on what that balance should be. I probably could make it worse than it already is, but I know that what we have here is not enough information to make a decision. And while I hate it, I think our mid-year budget has given us the time to really be able to get the information we need to make that big decision eventually, but not today.
In that same time period, we could also develop a policy regarding the fines, because sometimes when we're out on cannabis annual compliance monitoring, we see teeny tiny things that need correction. It would be good for the board to understand the process that we use, the discernment that we use, whether we're levying fines, whether we're taking a case to recommend revocation, things like that, and we can work that out. Additionally, Special Districts is already working with a consultant on their user fees. Perhaps that would be a start where we could just we could jump in and piggyback with them.
Yeah, further.
I don't disagree, because I don't know enough, but I know that to me, it's with an emphasis on development and housing which might be different than what special districts is hiring. So I don't disagree because I don't know who exactly they're working with, if it's the same ones that they've worked with in the past, but I just know, to me, it has to be with an idea of how do we incentivize development and not anything else.
I also just wanted to add for further clarification that the purpose of planning division is not just to process permits. It's also to roll out long-range planning implementation tasks, things like that, that are not revenue generating. So there is a prime purpose of planning that is not revenue generating.
And my concern with what I was struggling with is, and thank you for bringing that up, because I don't want to make a decision that would potentially limit access to the public to be able to get their permits, because we do have very little going on in the big picture right now. So if we're making decisions that are now limiting the public, we don't have enough staff, or limiting the public to come do that business, then we're losing that revenue also. So I do like the idea of some kind of an expert giving us some more information on really looking at the whole picture, because I'm certainly not an expert. You know, I have to rely on the information that I'm given and try to make a good decision. But if I don't know what I'm doing, I don't have the right information, that I don't want to put us in a worse position for moving down the road. So that's kind of where
we welcome
what I was concerned about today.
Yeah, we welcome an outside entity coming in and doing their calculations through their experience to see how to give you as complete a picture as possible.
And the fines are part of it, but we also got to remember that sometimes it takes years to recover that, so it's hard to rely on all that information. But go ahead, Supervisor.
I think that these exercises have been really useful. I know I've learned a lot. I think we all have looked through a whole lot of data over the last several months. And I think the next step is to bring in a professional that can help us. Because we need to, like you said, we can't crimp off our pipeline. We can't make our pipeline any smaller, because that will have detrimental long-term effects. But we need to be really strategic about how we move forward, and also how you collaborate with other departments too.
Yes.
I know you do a lot of work on cannabis that supports another department, the tax collector's department, and he's probably going to be very mad that I'm saying this right now. But that is a benefit that helps with generating revenue that is not recoverable for your department. And I think that we need to have a very clear understanding of all of this entire web.
CAO, do you have a comment?
Yes, I do. Thank you, Chair. I think what I'm hearing is that you're looking for not just fines and fees, but also an overall strategic approach to develop rural housing and economic development by looking at the whole picture, with the scope including those various caveats and review of our current plans. I mean, we do have some new plans, but that's what I'm hearing. I just want to clarify for the board that's what you are meaning.
That's what
Yes,
I mean.
I think that's what we're saying, a whole look at how we need to adjust that department to keep us moving forward.
Thank you for the clarification.
It also seems to me that you're looking to move towards what we've seen, like the city of Lakeport that already does, is they see, when they're making a decision on the budget, they see the cost of running the department, and then they think about what they want to subsidize to maintain that department at that current status, in order to encourage economic development. And so they look at it in that sort of a framework. This is the cost. This would be the fee to run this department, or our hourly fees. Where do we want to come alongside with our discretionary funding to make sure that this department is operating at its optimal level, but maybe not charging the fee that it would be required to do so.
But we're gonna have to move fast on this because we're already starting to work on the budget.
We like fast. We can do fast.
Do we have anything further? Go ahead, Supervisor.
If you please, Chair.
Yes.
As I've been sitting here today, we've already started looking into consulting firms and developing a scope of work so we can turn this around in a very timely fashion, and I'm just offering that assistance to CDD if they wish or so choose to have it.
We welcome the assistance. Thank you.
Okay, any supervisor?
Just to clarify, I just want to look for more than just solar as being the number one permit. We need housing like nothing else, so, and commercial activity. I know you're going to have a bump coming up soon. I'm crossing my fingers. I know it might be December, it might be a little bit later, but that's also a one-time bump that may take a year before all the permits are done, may take 2 years before all the permits are done, but we need this consistency that we are seeing in your graph to change and not just hang our hat on the Maha project, that it will require a lot of permitting and things like that. But that is something that is coming up. We need to be prepared for that. But I just want to see other things moving around and turning around too. So I think I'm glad that we're all on the same page. That makes this conversation easier. And I feel like I wish we had the conversation before so that we could have more time to go through the process. I still think there is time to go through this process, but I feel like it also, I don't know, just a feeling of calmness of we have time, our mid-year is over, you've got the support, and let's just get this, and then we'll make that tough decision later on in June because we need that information. So,
Are we ready to open to the public? Yeah, I'm sorry. It's late in the day.
couldn't help it.
I was just going to ask, would you guys like me to go over the options that are presented in this presentation?
They're available to the public.
Yeah, I don't think they are.
I've seen them. I don't feel like I need
Okay. Just a couple of points of clarification. I think that the presentations that we brought to you in the past were intended to drive this conversation exactly. The reason that we weren't coming up with more specific options previously is because we were looking for this kind of direction, this kind of policy direction, and we seem to be really focused on the dollars and cents, correcting a budget, correcting a deficit, and we knew that this was ultimately the conversation about what are we going to do about the fact that the fees don't support the department. So that maybe looked like we weren't taking your direction, but we really were looking actually for a little bit more so that we could narrow in and focus in on what you ultimately really wanted. So I apologize that it's taken us this long to get here. I'm grateful that we're having this conversation now. A second point of clarification that I think we need to make for the public. CDD is not in charge of the cannabis fund. There seems to be a lot of misconception about that. In this presentation is outlined fully all of the cannabis revenue that CDD brings in. And so we are not in charge of that. We don't go taking money out of that pot when we need it. And so I just wanted to clarify that the cannabis revenue fund is separate from CDD.
So when you get fees in, they go to that, and then you draw back.
Yeah, that's
What
the
would-
only part that we kind of are in charge of ourselves is cannabis fees that get processed through CDD get automatically deposited into the cannabis revenue fund, and then once a quarter we journal that back. But the other pots of money, Copter is funded by cannabis. There's a pot that is for planning salaries that was
Or the
used
30%.
to help the department in the last MOU salary increases rather than raising fees at that time. And that money is coming in, but those are the only cannabis revenues that our department is currently involved with.
And I apologize because my comment was more kind of for us too. And if we do a study, I'd like to see that, if that makes sense. So sorry if it seemed like I was blaming.
Not at all. This was actually to clear up some miscommunications that we've heard have been shared freely throughout the community. So, and it was just based on faulty data. So,
There's also a code enforcement officer funded through cannabis.
Thank you. So we ready to open to the public? I think so. I'm going to go ahead and open to, oh, go ahead. Okay.
I thought we said,
I thought we decided we didn't need to.
never mind.
We've reviewed it. It's available for the public. Go ahead and, do you have public comment? Go ahead and come forward.
Good afternoon, Chair, members of the board. Just wanted to, well, we got to start the clock. I'm not going to start until the clock starts. That's okay. The one concern, and I think, first of all, I want to appreciate all the comments that I heard from here and also from the board. I do believe that you do need to have someone outside to look at the fee schedule, but I also think someone needs to take a look from the outside at the structure of CDD. There seems to be an assumption that it's currently operating at peak efficiency and that not one person could possibly be spared, and I'm not sure that's the case. For example, in building and safety, with 8 people, they used to be able to go through over 2,200 permits in a year. And that math works out to about 280 per person per year. And now it's only 90 per person. So if you have done the forecast and you say, for better or for worse, you're only going to have 1,000 permits coming in, then you need to plan for that level of staffing. You just can't assume that we're going to, staff for the peak, especially when you have departments that are very sensitive to market forces that run in a cycle. Building and safety, depending on which research you do, is anywhere from a 9 to 15-year cycle. And if you're staffed for the peak, that means the other remaining years you're overstaffed. So you do need to have someone take a look at the fee schedule, because that's part of the equation, but also how the department's organized. And I think there is room for reducing it and to say, well, this is how much we work on, so this is how much we cover with fees and other aspects, and the rest we're going to use for taxes. We still need to take a hard look at to make sure we're doing that efficiently, because right now that doesn't seem to be the case. There is opportunity. The characterization of option 1 being something that's draconian that will cause the world to implode in on itself. I think there's still room within that in order to make improvements, because right now there's a lot of money that's floating around and it wasn't managed. And the last thing I'd like to see is better fiscal discipline. What are we going to do to prevent this from happening again? You should not wait to the last minute to find out that somebody's out of money and that you need to make a loan. All of that needs, all those checks and balances that should have been there that weren't done, that in the previous hearing, they are just a couple hours ago, they acknowledged that they don't really do anything. That's all got to change. So get the consultant, but also take a look at the entire picture, not just rates.
Thank you.
Thank you.
Do we have anyone else in the room?
Good afternoon, Supervisors. Margot Kambara. Despite the options provided by Community Development Department, CDD, to your board, an important element is missing from today's presentation. Action taken or proposed has not been identified to prevent a repeat by any county department of the root cause of the $390,000 budget shortfall. The scale of the overspending and dipping into reserve funds without board authorization calls for an independent audit. There is no shame in calling for an independent audit. It is a routine and respected measure of fiscal responsibility for the Fortune 500. Considering the severity and late revelation of the budget shortfall, the proposed biannual CDD financial update to your board is insufficient. Financial updates to your board should occur monthly until your board is confident in the progress of and reporting by CDD and admin. At that point, quarterly CDD financial updates should occur. The options that CDD presents to your board are extreme. The presentation of unrealistic choices maneuvers your board to the reasonable pass of option two's considerable staff cuts and moderate fee increases. It is reasonable for your board to direct staff to return with options more realistic than today's options 1 through 3, which I believe you have concluded. Your board may wish to instruct staff on its presumption that staff will focus on revenue generating activity. The public values staff work that is not revenue generating, such as code enforcement, complaint investigation, and nuisance abatement. CDD's focus on code enforcement for revenue generation is chilling. It preys on the vulnerable in our community. Similarly, the proposed new fee for fire inspection does not intend to improve health nor safety. Its purpose is revenue generation. To focus on revenue generation, CDD suggests consider reducing Planning Commission meetings frequency. The Planning Commission meets twice a month or 24 times a year. Last calendar year, CDD adjourned 7 Planning Commission meetings. Reducing the number of Planning Commission meetings can increase the delay in processing permits and requests that require Planning Commission review. A backlog of permits could impede economic development for the county and fee generation for the Planning Division. CDD also suggests ceasing complaint-based grading and stormwater inspection services with a small portion picked by code enforcement. This suggestion conflicts with county responsibilities required by the Lake County Municipal Code, Chapter 29, Stormwater Management, and Chapter 30, Grading Ordinance. For stormwater management, the proposed action may not be necessary. I just have a few more paragraphs to
Well,
go,
we need to wrap up. We don't.
but I appreciate your attention. Thank you.
Thank you. Do we have anyone further in the room? Not seeing anyone online, Johanna? Sterling, we'll unmute you. Please state your name for the record. You'll have 3 minutes.
Yes, my name is Sterling. After watching the Board of Supervisors meeting today and all these directors coming up here that are in charge of all these budgets, and we have nothing but major deficits, they're stating that we're down 300 permits for this year. The gentleman before that just spoke, we had less staffing and more permits being pushed through. I think raising the fees for permits is going to downplay people wanting to get permits because it's already literally impossible to get permits in Lake County to build pretty much anything to get approved. All the loopholes you have to go through, the money that you have to spend to even improve anything is kind of just defeats the purpose of even trying to get a permit and even building here. Then you're turning around and we're going to wait until June, pay a consultant to come in and manage something that we already pay somebody that is undereducated for the amount that they're being paid for to manage this. This is the first time this year this has happened. It hasn't ever happened before, as I don't believe, but you know, you have the tax auditor lady that was there. She couldn't even answer questions. You have the city manager coming up, showing a piece of paper where they didn't pay the money. She's looking around. You have these 2 ladies sitting here that are running a department that can't even figure out finances or how to fix the finances, but then came to you last minute. People that don't pay their bills on time have consequences. And everything that I've watched today through the Board of Supervisors and all these head directors that have been hired in to do their jobs correctly, that supposedly have the education to do these jobs, to have that amount of hourly pay, has ran our county into major deficits. And we have you guys sitting here as the Board of Supervisors, allowing them to keep coming in and give you excuses instead of just giving the hard actual numbers. Numbers don't lie. Numbers are easy to show. And hiring extra people and keep giving people raises when you see that it's just not working is not a proper way to run a business. And I really hope that you guys as board of supervisors of just today of watching this realizes how mismanaged Lake County is with the directors that have been hired to be sitting in these spots. Thank you.
Thank you. iPhone X Max, if you could identify yourself for the record, you'll have 3 minutes.
Sky Lewa, Pillsbury Family Farms. On a normal day, this board would not say it hired Director Turner for her fiscal expertise. Yet, on a normal day, this board approved a mid-year budget that does two things at the same time. Reduces staff and grants Director Turner a raise of $11,695, and that decision deserves public scrutiny. This board approved reductions after overspending occurred, then rewarded the same leadership responsible for the conditions that required those reductions. At the same time this raise was approved, option 2 on Director Turner's memo proposed the elimination of 6 positions, including 1 for the public records request position. And that matters because the public is already experiencing delayed responses, limited communication, and reduced access, and the conditioning has already begun. Limiting access to public records limits the public's ability to ask questions, receive interpretations, and participate meaningful in governance decisions. And it is not efficiency. It's creating a bottleneck. It disproportionately impacts small residences, operators, and those without legal teams on retainer. With Director Turner's leadership, fiscal stewardship of the Community Development Director Department, this board has made it clear that it finds the current direction acceptable. And that position conflicts directly with the goals that you have publicly stated already. You say you want a housing boom, yet you're reducing planning staff while simultaneously accepting grants that require administrative capacity. You say you want economic growth, yet the cannabis industry sees selective enforcement, shifting rules, and delayed responses. And most cannabis operators already don't want to come to Lake County under these conditions. And it's already overregulated, inspected, and penalized, and without consistency or predictability. And transparency is not a talking point. It is staffing, access, response time, and accountability. And again, if reductions must happen, I urge this board to make them from the top, not at the public-facing level where harm is already occurring. If the fiscal stewardship is truly a priority, as you say, I urge you to consider appointing a senior planner as interim director rather than continuing to reward the current leadership while cutting the very positions that serve this public. Because on a normal day, accountability would come before raises. On a normal day, access would not be reduced while compensation increases. On a normal day, transparency would not be optional. Muleham.
Thank you.
You had
Guest 1, if you could identify yourself for the record, you'll have 3 minutes.
Thank you, Mr. Chair. Angela Amaral. First, I'd like to point out that this agenda item was pushed to March to allow for full board attendance. I'm a little disappointed to see that there was no discussion or consideration to continue this item to next week, since it was a desire of the board to have the entire board present. There are significant changes proposed in Supervisor Owen's district, as well as Chair Rasmussen's district, with the cessation of general code enforcement activities in those areas. South County deserves to have representation present before these drastic changes are considered and potentially implemented. As to Director Turner stating that they are observing teeny tiny violations on commercial cannabis projects is a bold-faced lie. As someone that has been advocating for transparency in the commercial cannabis industry to ensure it is being done as intended, it is frankly insulting for CDD to continue ignoring the bad actors. You all have heard from the gentleman numerous times who has had to take it upon himself to sue a neighboring commercial grower for loss of water when his well went dry. The grower operated for well over 2 years using hauled water. Only recently did code enforcement become involved. I don't know if any citations have been issued for the violations, but there should have been severe penalties already applied due to the length of time. Right now, we have one department in CDD, talking about fee increases and another department, economic development, talking about a fee waiver to encourage development. These appear to contradict each other. Hopefully, this board takes this as a hard learning experience on the importance of strong oversight. Any fee analysis should be done by an outside department or entity, and I agree with Supervisor Sabatier on considering the use of a consultant. Please don't punish the general public for a department mismanagement. Thank you for your consideration.
Thank you. No more hands. I'm going to close public comment, bring it back to the board. And it sounded like we already had consensus on this. Is there anything further from the board? Supervisor Sabatier?
I do need to clarify. Number one, in mid-year budget, we did not approve raises. Just didn't happen. That was from back in May that we approved the previous year when we did our new MOUs with all of the unions, which included also the non-represented folks, which is our directors. So that was from almost a full year ago, 9 months ago. So that's not the case. It was just highlighting the additional costs. Number two, we did not postpone this because of a lack of attendance. I think we had a full board. We just didn't have all the materials prepared for the discussion, if I remember correctly. That there was a need for further information or further time to continue. I don't think it was because of a lack of a board. So I just wanted to clarify that there are statements being made, and I felt clarifying was necessary rather than just leaving them as is.
Yes, and lastly, I'll say, I think, in some of the comments I heard, we are looking to get a consultant to take a whole look at all of these issues because we want to figure out the best way to still serve the public, be accessible to them, and not slow down development. Go ahead.
And I'm also okay looking at the structure of the department as well. I'm okay to look at just everything right now because money is important for us to use wisely. Efficiency is important for us to get things done timely, and so I'm wide open to all of those things, not just the fees and things like that.
Correct. That's where I am.
Yeah.
So I think we can close the item at this point. Go ahead, Supervisor.
I just also want to thank admin. I know you put a lot of time in, and I know this is not where your expertise lies in community development, but there were a lot of hours that went into getting us to this point, and I am really grateful for that, so thank you.
Thank you for that. Don't think we have anything further. No further action needed. Do you have more questions? Or go ahead, CAO.
Thank you, Chair. If I may take this opportunity, given the outcome of this discussion, I would just like your board to consider that we may not need the closed session item related to this issue.
Do you have a comment? We have consensus on that? And then go ahead.
Yeah, just a comment, because typically RFPs don't come back through us. Can you keep us posted? I'd love to be in the know of where we are in the process rather than being surprised if things take longer. And I'm hopeful that we can get the RFP out and hopefully not a super tight timeline because we want to make sure that it's available for as many consultants or as many folks to have the opportunity to submit their proposals. But hopefully within the next 30 to 40 days, we can turn it around and say that we've found some applicants. That's what I'm hoping.
And then it would be brought back to us, right? Yep, there we go.
So if I understand correctly, then we are not making any changes in current service or staff at this time.
Other than what was done at mid-year budget, which
Correct.
did reduce positions.
Yes.
Correct.
Thank you.
Okay, anything further? Thank you. I'm going to call our 6.10 our 2 p.m. item, which is consideration or presentation of the 2026 Weights and Measures Report. And I understand we have a request to continue that to March.
It'll continue to March 17th, please.
Okay, so that's the request in front of the board. I'm going to go ahead and open that up to the public, just on whether or not we should continue that item. Not seeing any in the room. Anyone online? No. Okay, bring it back to the board, and it looks like we have consensus to move that. Now I'm going to move on to our .11, which is our 215 item. A, consideration of resolutions affirming the County of Lake's highest fiscal year 2027 community project funding and congressionally directed spending priorities. And B, consideration of a letter of support for the Lakeport Fire Protection District community project funding and congressionally directed spending requests. And we're going to start with the A, and I'll turn that over to our Chief Deputy, Mr. Rothstein, to start that.
Good afternoon, Supervisors. Good afternoon, Supervisors. Matthew Rothstein, Chief Deputy County Administrative Officer. As your board is aware, on Friday, February 20, 2026, Congressman Thompson issued a letter inviting 2027 community project funding requests. Senators Padilla and Schiff likewise issued guidance, and each representative is asking that project priorities be submitted by the end of day this Friday, March 6. You will recall projects submitted in fiscal year 2025 were ultimately not funded, and as a result, Congressman Thompson submitted the first phase of the South Main Street Soda Bay Road widening and resurfacing project for fiscal year 2026 consideration, resulting in an $850,000 allocation. Successful submittals have generally been well-established, community-supported projects. Each member of Congress is permitted to submit 20 projects for consideration this year, and the process is generally very competitive. Projects submitted in FY26 were received favorably by our legislative delegation, and this, to be clear, is the projects that were submitted last year. Senator Schiff put forth the South Lakeport Regional Water Resiliency and Fire Protection Project, which is a $7+ million request, and Senator Padilla was supportive of the Heart Hub project. Probation's justice-involved housing project, reentry housing and workforce development for those returning from incarceration in Lake County, California, is likewise a robust and community-supported submittal. Therefore, staff is recommending resubmitting those 3 projects since they've previously all been vetted and deemed competitive. Additionally, staff sought input from department heads and others regarding projects that could be granted priority. Special districts and Public Works each submitted proposals. Public Works' project is phase 2 of their previously funded project in the South Main area. Special District's proposal, their proposed submittal would reduce burden on existing southeast wastewater collection system infrastructure, reducing the probability of future sewage release events. All projects that were submitted to administration in a timely manner are reflected on your agenda. During a February 26 briefing, staff to Congressman Thompson advised submitting any viable potential projects concepts with significant public benefit at this stage, and submitting all projects proposed for funding through both the House and the Senate's processes. Therefore, adoption of each of the resolutions attached to your board's agenda today is recommended. Staff welcomes your board's discussion of priority, and we're also likewise cognizant that final priority ranking should be informed by what projects are ultimately viewed by our representatives as most competitive, and getting one or more quality project funded is the goal, certainly. Staff from Paragon Government Relations, Hassan Sarsour, you can see in Zoom, is here, and then also the proponents for each of the projects are here as well, most in the chambers. Should your board have any questions? And that concludes my presentation for Part A.
Thank you, Mr. Rothstein. You want to start with Supervisor Sabatier?
So I appreciate this, and let's hope that it doesn't happen like last year and that we can get some of these things through. But if we don't try, we won't get. Our I want to talk first about item number 5. I think it's important, the lift stations, those are to help with some congestion that's happening, I believe, over in the avenues, which would go down to the Vallejo area, and then the Highland one, that's kind of a long standing project dealing with Canocti Gardens, where that's where we want to make sure that the capacity is going to be able to handle the increase from that low-income housing that was just built. So those two things are fine. I don't want to touch what's already there. What I do want to do is add. I feel like we have come to terms with some of the problems of Southeast. We are having conversations, at least at the state level, to see if there's some potential funding. And I just don't want to put all my eggs in one basket. I'd rather see if we can throw some of that towards the federal government as well, just to see if this gets canceled, then maybe that's possible at the federal level. If the federal level cancels it, well, at least maybe we could still get it at the state level. I'd rather try all avenues. And so I know the Headworks is a big project where I may be misquoting Director Bore, who said it's like a 10-lane highway going into a 1-lane highway. And so to me, that has been highlighted as an important hiccup in our system. Maybe that's the wrong word, but I would like to see if we can add that. I don't know how ready it is versus the other projects that have been worked on for quite some time, because I know that these types of projects have to reach a certain level of design or a certain level of readiness, but I at least want to attempt to add that in item number 5, because I think it's important enough to just add it. And again, if we don't get it, at least we asked and at least we tried. I know that I see Director Bore kind of moving around, wondering if she wanted to speak to that or if I can move on into other portions of this.
Yes, we'll go ahead and let her address that question.
Okay,
That's
thank
okay.
you. So the Headworks project, yes, it is a conglomerate of 3 different pipes going into one area. It is in our CIP for design funding already, so as soon as Adam comes up for air from the project that he's finishing up now, his priority is to get out a new RFP for a new engineer to get that designed. Should be a relatively easy design, I would think, so that it could be ready soon. So Matthew and I have been talking about the language for putting that in there.
So you believe you have what you need to add that in by Friday? Okay. Go ahead.
And then just my I guess I'll make one comment and I'll wait to see if someone else makes the comment that I also want to make. I'll wait to see what other comments are made before I make my comment.
Okay. Any further from supervisors? My comments on, what's that?
I said I think I know what he's going to say. Go ahead.
Okay. Well, I mean, I like that we're submitting whatever we can. I think the situation is, and Mr. Rothstein or Paragon could correct me, but it's really going to be in the hands of the federal government to look at these and then figure out what might have a path to funding. Like some may be, in their eyes, stronger than others. And once they look at it, we would get information back that something has got traction and we potentially be asked for more information. So I'm in favor of, what our plan is here and to agree with adding to the southeast sewer if we can get something added in there. I did want to make one statement about regarding the South Main project. So I think the way I'm looking at that, this is the South Main Water Soda Bay Road, is that the city of Lakeport's going to do what it's going to do as far as a possible move down towards the theater. Our funding that we have secured right now is going to push us to be able to fix the road down to about the movie theater. But we are still working hard to seek more funding from multiple different sources to finish what I would call phase 2, which is the Soda Bay Road portion down to Manning Creek that we don't yet have funding for. So I see that that request as something that if it gets traction, we can apply to that section down there, because we certainly want to, because I feel confident we're going to find a funding source at some point. I want to be able to also be able to put the infrastructure there for water if that comes up. And I see Mr. Ewing, I don't know if he's going to correct me or offer.
Lars Ewing, Interim Public Works Director. If your board would entertain just a comment, just to
Yes,
add
please.
on to that. Everything you said there is spot on. What I would add to it is the shovel readiness of the project is critical. The whole corridor, South Main, Soda Bay Road, has been environmentally studied. We have CEQA clearance and NEPA clearance, the federal equivalent. We have permits secured. We have right-of-way secured for the entire corridor. We did secure funding through a variety of different sources, the bulk of which was through the State Transportation Improvement Program for the road project from the city limits heading south toward essentially to the movie theater. And so the second project the second phase would continue that, and looking at it as one whole project, we have, we're bringing a lot to the table, we, the county, through a variety of different sources, and it includes federal funding. And I apologize, I walked in after Matthew had already made his opening comments, but the last round of funding provided, I believe, $850,000 of federal demo funds. There's already the federal path there for funding for that road project. It's clear. So, just with my experience with capital projects, the shovel readiness to be competitive and eligible, well, not just eligible, but the competitiveness is critical. So I think that's one thing that really stands out on this. Another piece is the water line. It's important to, I think, note that. For the South Main, essentially the South Main Street portion, the city of Lakeport is working on their design. They have the same design engineer that the county used for the road project, so that's in the works. And we certainly don't want to be tearing up a road, putting water to put a water line in. So it's important that we have that coordination completed for either phase. But that coordination is absolutely in the works right now with the city of Lakeport. Can't guarantee anything on that front, but the road project for that first phase, city limits to the movie theater, is anticipated for 2027 with work to start this summer, if not fall, probably fall, for undergrounding of overhead utilities. So you're going to see work starting very soon, but that's not to say that when we break ground, that water line project has to be dialed in. So variety of different factors at play, but what I would really emphasize on this is two things: the shovel readiness and the funding that is already coming into this, where for almost $6 million ask, it brings up a $17-18 million project.
Thank you, Mr. Ewing. And I'm not sure who was first.
She was first.
Supervisor Pyska.
Yeah, and I think all of these are really important projects. I just have a question for Matthew or Hassan. In the past, we've been really strategic about which subcommittees we were looking for projects for, and knowing that some are more competitive than others. And so I just kind of wanted to get your thoughts, and maybe this is Hassan, like, just generally, how successful could these applications be, or these projects be, given the competitiveness in some of the subcommittees?
So sure, yeah, I can take that question, Matthew.
Go ahead.
Hey everybody, Hassan Sarsour, Paragon Government Relations. First of all, great update by Matthew. These are all, I agree with Supervisor Pyska, these are all great projects. I think these would all be of interest to Congressman Thompson and our two senators. I do want to highlight, and Matthew mentioned this in his comments, but this year the projects are up to, House members can submit up to 20 projects. So that's a change from last year. Last year was only 15. So there's more opportunity there. The one thing I do want to caution against, though, is that there's going to be, the pot of funding has not increased. So more opportunity, but same level of funding. So we could actually see projects squeezed down a little bit more. So something to be aware of with some of these projects. And I know some of them have some of these higher dollar amounts. What we've seen is generally these projects are going to fall between $500,000 to $2 million, maybe at the high end. There are anomalies. There's projects that go above that. The ones I'll point out are ones that can go through the Army Corps of Engineers. The county does have an existing authorization. It's a $20 million pot of funding that's just sitting there that we can tap into. And that one is not very competitive because not everybody has that same authorization. So those water resiliency infrastructure projects, those are eligible for that pot of funding. I think those would be probably the best ones to get the highest dollar amount, again, because there's less competition for those funds. The ones that would go through, for instance, HUD EDI, those workforce development type accounts, it's pretty broad and flexible. There's no local cost share involved with that one, so it's very, very popular. Those are the ones where you'll see a lot of projects, but they won't be high dollar amounts. So anything that would go through that account, which is a few of the projects on here, I would be concerned that might come in at a lower funding level. Any transportation project that's on a statewide transportation improvement plan is eligible. Those we've seen do very well with members of Congress, do pretty well with level of funding. So those are good ones. The Heart Hub would likely go through, and this is another change from last year. They've opened up the Labor, Health, and Human Services spending bill. This is a great candidate for that bill, and I think when it was introduced in the Senate, that account has been open in the Senate, but it always sort of falls by the wayside when they go to negotiations with the House because the House hasn't allowed that account to be earmarked. But there is a lot of pent-up demand for those funds. So I think that's a good project for that account. Again, I don't think there's any wrong answer here. We can work with Congressman Thompson and the two Senate offices to see which ones are probably get the most money, but it would be nice to have them listed in order of priority by the county. The other thing I want to mention is in our discussions with Senate staff, they are going to keep a close eye on what the House members submit. So their strategy this year is anything that's not submitted in the House, that's what they want to put forward in the Senate. The whole strategy is let's maximize the amount of funding that goes to California, which is great. Admittedly, it's very difficult to get a project through the Senate offices. So our main focus on these projects should be Congressman Thompson. Again, he's generally a member who likes to spread the wealth among his district. I would expect to get maybe one project and possibly two with it, moving up to 20 projects this year, having him submit those. So a couple key considerations to keep in mind. Hopefully I answered your question, Supervisor Pyska. And yeah, happy to take any other questions.
Yeah, thank you. I appreciate that because in the past, I want to say a lot of them, the ones that we got were around the 500,000 mark. And I'm not sure that we were successful with much higher than that. Were we, Matthew? I don't think so. And I remember being really strategic about which committees.
Yes.
Supervisor Crandall?
Yeah, we one year we got the Middle Creek, that funding came through that. I don't know if that's the same year you're talking about. No, okay. I was thinking about just the discussion, and I have a feeling that my colleague is going to bring this up. But in my district, I know that there's been a couple that I talked about, and that's levees and whatnot, but it's not shovel ready. And then there's also a project called the Caltrans Mitigation project that's going on. So I'm only saying this because in case someone's watching and I'm not saying anything that I didn't talk about any projects in my district, there has been. They're just not shovel ready as of now. And I think I need to reevaluate some of them that could be. So as of right now, it would have been something just to throw on the paper and probably wouldn't have got chosen by powers that be, I guess you could say.
Thank you. Go ahead, Supervisor Sabatier.
And I will admit that the regional water resiliency gives me a little bit of heartburn. It's not that I don't want it. It's that I know these take years before we ever see any dollars that we can use. And there's a timeline to get this road work going, and I just hate the idea of doing road work and then having to rip it up just to put in some water. And so I don't know. I hope the timeline fits and works. I just know that it gives me a little bit of heartburn. And speaking of getting haunted by the past, right? Like we all do the best with what we receive and what we inherit. So perfectly fine for it to move forward. But I will elaborate a little bit on what my colleague was bringing up. I mean, I'm looking at number 1, South Lakeport, looking at number 2 in the city of Lakeport, looking at number 3, North Lakeport, looking at number 4, South Lakeport. I think we need to do a little bit better in preparing projects that are going to impact many other communities, because this doesn't look good and it doesn't feel good that this is what is easy to come together for us. And so I don't know if it's a process of how do we get those projects, but I know that it gives me pause as to, I think we could do better than how centric this feels and looks. And in the past, that's not always been the same, so I don't think it's a continued issue, but for this one time, I have to at least mention it.
Thank you for that. Was there anything further?
Do you want us to rate these in order of importance?
So I would say we could discuss priority. My concern with ranking them in a hard and fast way, though, is that, I know Hassan and I will have conversations as this week goes along and try to position all the projects as best we can.
Okay.
It seems to me that we would need a little bit of flexibility to position those in the best way possible. But Hassan, I can toss to you a little bit as well.
Thank you. I'm not in favor
Yeah.
of having to rate those right now. I think that's going to come. Go ahead,
Well,
Supervisor.
I just want to follow, because in the past we have, and so I'm fine not ranking them if you want to
Yeah.
figure out the best way
So
forward.
I want to speak just very briefly to process in the past. We've had a discussion where we had project concepts, and that preceded the time that we were needing to adopt resolutions so that we could begin the process to submit projects. This year, because the timeline was so abbreviated, we didn't have an additional meeting to work with. So that is one distinction, and why this year's process doesn't entirely mirror last year's. And why, for example, we put forth for your board each of the projects that were submitted that appeared to be ready to enter into this process. And those happened to fall in the geographic locations that they did. Certainly there was no intent to, target one specific area of the county at the exclusion of others.
Thank you for that.
I just wanted to tell Hassan that all priorities make it happen. I do want to bring up that there may be something coming in the future. I did receive and failed to, it wasn't really requested in such a way, but there is a request coming from Adventist Health for for lack of a better term, like an opioid clinic with cardiology and other things that are related to just overdose issues. They're looking to get some funding to build out this facility. If there is movement on that, then in the future you will see a letter of support that comes back to this board to see if we can help get that support. But just wanted to at least identify that there are other projects. I believe there might even be one from RCD, I was just told.
Yes.
So they may not all be on this list, but there's much more being requested from
our community,
our area.
Yes.
But what Hassan is telling me is we can add 5 more and we're good. So we're good.
So, is there any more on this portion of it? Do we want to handle the B portion before I open it to the public, or do you want to weigh in on that, County Council? I've got another section of this. We could either handle that or do it as a separate item, I guess.
Thank you, Mr. Chair. So that would be up to your board. One option is to just not treat it separately, treat it as an A and B.
Okay.
And take public comment as to either or both.
Yeah,
And
at the
then
same
bring it
time.
back to the board with separate actions.
Okay. Then, what's that?
I'm good with both.
Yeah, I'm going to go ahead and just introduce it then, and I don't think that one will take very long. So this would also be in the realm of community project funding through either the Congress or the U.S. Senate, but it's a request from Lakeport Fire Protection District for our board to issue a letter in support of their community project request, which is essentially land acquisition for a new fire station at this point. So that's the the request with that, and you had a draft. We're not open yet, but we had a draft letter in our packet for that. Do board members have any questions on that at this point? Not seeing any questions from board members, so we'll go ahead and open this whole thing up to public comment at this point. You want to come up first, Chief, since you're in the front row?
Good afternoon, Chair and Board. I'll try to keep this brief. Patrick Wrights, Fire Chief, Lakeport Fire. As you are aware, our fire station is not in good shape. It ranges from being almost 100 years old in its oldest portion to 60 years old in its newest portion. We are basically pouring sand down the rat hole, just trying to keep the doors open and the lights on a building that really needs to be changed out and is not operational as a modern fire station by any stretch of the means. With that request, understanding that we're all competing for the same pot of money, we certainly understand that there's some conflict or potential conflict. However, we are seeking your support in the form of a letter for our project of $1.8 million request to both the congressman's and the senator's offices. We're a little bit new to this world and chasing grant money as much as we need to and chasing these earmarks as much as we need to. But we would appreciate your support. I do request 2 small edits. One's a little bit larger than the other. First, we didn't include Congressman Thompson's in our request to you for a letter of support. So we would request a 3rd letter of support. And my apologies to the board. This just came up 20 minutes before I was scheduled to be over here. I received a call from an advisor. There is some question, and we're hoping to get clarification over the next few days on property acquisition. We have been told 2 separate answers. One is that they will not support property acquisition request regardless of the need. And one saying, no, we absolutely will support property acquisition request. So we're kind of caught between a rock and a hard spot, and one of our advisors has suggested that we put in for a second project as well that is not property but a truck. So without truck shopping and getting into specifics, we are going to be requesting a second and would request this to be added to the letter, but understand that it may not be possible, and that is for a new Type 1 fire truck at the cost of $1.4 million unequipped and $1.8 million to be equipped. I will defer to the board's judgment of what you want to support, but we would add those 2, ask those 2 edits if possible.
Okay. We've already adjusted the letter to be addressed to Congressman Thompson as well.
Yes.
We did that last week.
Thank you very much.
So the letter in there is addressed to both senators and the congressman. So we can discuss the second request.
Okay. Well, thank you very much. Any other questions of me?
I don't believe so at this point.
I appreciate your time. Thank you, Board.
Thank you. And we have Director Ewing.
Lars Ewing, Interim Public Works Director, one more time. Just a few things that I think are important to note for the South Main Street, Soda Bay Road, really the Soda Bay Road project. Public Works, within the last couple of weeks, submitted a grant application to the Federal Department of Transportation, the BUILD program, better utilizing investments to leverage development. So I wanted to let Matthew, that's a former RAISE, former Tiger grant, if these things ring a bell with anyone in the transportation world. Typically you would see those on state highways, but I think it's important to note that for the purposes of finding that pathway to federal funding. So happy to provide some information on that. And then also really unrelated to South Main Street, Soda Bay Road, but looking ahead more to that geographic piece that Supervisor Sabatier talked about. There was reference to a state transportation improvement program, at least for transportation projects. If a project is on the state's STIP, they tend to be competitive with these the community project funding requests. The South Main Street Soda Bay Road project has been the highest priority, or at least one of the highest priorities within the Lake Area Planning Council, which is the Regional Transportation Planning Agency. After South Main Street Soda Bay Road, or I should say also on the priority is, as Supervisor Sabatier knows, is the Dam Road roundabout. And so that's very much, it's really the only other project other than South Main Street Soda Bay Road that any local jurisdictions have, at least going off of memory. So provide some, at least on the transportation side of things, maybe the future could be bright there with respect to another district outside of District 4.
Thank you. Do we have anyone else in the public wishes to comment? Not seeing any in the room. Anybody online? No hands. Bring it back to the board. I guess to address Chief Wright's request, I personally don't have a problem adding that into the letter. I don't know if any board members have an issue with that. Or
I don't, but I have a question for Hassan.
Go ahead.
Is the property purchase allowable?
Yeah, it's a great question. So I just pulled up the guidance. Depending on the account they go through, I would recommend the HUD EDI. Property acquisition is eligible.
Okay, there you go.
Okay, so would adding the truck to the same letter be acceptable, making edits to that? So I think, Matthew, do you kind of have an idea of what we'd be adding based on what was said?
I just would look to Lloyd as to whether we need specific language.
Not too specific, if I may, Mr. Chair.
Yes, please.
So I believe your board can approve the letter as amended with those amendments to staff, incorporating those, I think by my count, two main items, one related to a truck, the other related to property acquisition.
Right.
And give staff the direction to come up with the language for that as part of your board's approval. But I would also add more specifically on, since I do see that Honorable Mike Thompson is included on the, as the identified recipient there, that on the header or on the Dear Senators Padilla and Schiff, that there would be a Congressman Thompson be added there as a reference as well, and that can be made as part of the amendment for approval as amended.
Okay. Do you have further comment, Chief?
Just one, for clarification, we were advised, and not challenging your legal advice, but we were advised just to CC at the bottom of both senators, the other senator's office and the Thompson and Congressman Thompson's office, and vice versa on Congressman Thompson's office. So instead of including two addresses at the top of it, just doing it as a CC. Your preference either way. Thank you.
Okay. All right, so.
And we certainly have submitted letters both ways in the past.
Okay. All right, so I think we have all our discussion on this. We're ready for action, which we have numerous items of action.
Yeah.
If somebody wants to take a.
So, and Robin made reference to need of some language changes to the resolution surrounding the Southeast
Correct.
project. So the language that I'm recommending in the 7th whereas statement of that relevant resolution would be replaced with the following. Whereas the Southeast Wastewater Collection System Improvements Project, the project confers considerable public benefit, installing 2 lift stations and headworks and wastewater plant infrastructure improvements that will collectively capture a significant amount of wastewater flow, reducing burden on existing infrastructure and significantly reducing the probability of future sewage release events. And then additionally on page 2, the not to exceed amount of the request would be adjusted to $3 million as opposed to the $2 million that was there before. So we just ask that when you offer the resolution for that one particularly, that it's as amended.
Okay, got it. Thank you.
Mr. Chair, I offer resolution authorizing submittal of the South Lakeport Regional Water Resiliency and Fire Protection Project for consideration as a community project funding proposal.
That resolution's been offered.
Supervisor Sabatier?
Aye.
Supervisor Crandall?
Yes.
Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye.
I offer the resolution authorizing submittal of the re-entry housing and workforce development for those returning from incarceration in Lake County, California project for the consideration of a community project funding proposal.
That resolution's been offered.
Supervisor Sabatier?
Aye.
Supervisor Crandall?
Yes.
Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye.
I offer the resolution authorizing submittal of the Lake County Healthcare Education and Regional Training Heart Hub for consideration as a community project funding proposal.
That resolution's been offered.
Supervisor Sabatier?
Aye.
Supervisor Crandall?
Yes.
Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye.
I offer the resolution authorizing submittal of the Soda Bay Road widening and resurfacing project for consideration as a community project funding proposal.
That resolution's been offered.
Supervisor Sabatier? Supervisor Crandall?
Yes.
Supervisor Pyska? And
Yes.
Supervisor Rasmussen?
Aye.
I offer the amended resolution, right? Or as amended. The resolution as amended authorizing submittal of the Southeast Wastewater Collection System Improvements Project for consideration as a community project funding proposal.
Amended resolution's been offered.
Supervisor Sabatier?
Aye.
Supervisor Crandall?
Yes.
Supervisor Pyska?
Yes.
And Supervisor Rasmussen?
Aye.
And Mr. Chair, I move that we approve the letter of support and from the Lakeport Fire Protection District as amended and authorize the chair to sign.
Second.
Okay, we have a motion and a second. All in favor?
Aye.
Aye. Opposed? Hearing none, that motion carries. And we're going to close 6:11.
Mrs. Hawes?
Leave. We're done with the sixes, CAO. Moving on to 7.
Yes, sir.
Does anybody want to offer reports this week, or?
I would like to forego reports if possible, since we have yet to really tackle closed.
There's consensus, we'll forego until next week. I'm going to move on to 7.2, which is consideration of administrative office overview presentation, and I have a request from staff to move that to, I believe, March 10th.
Yes, sir.
Anybody from the board? Sounds like we're okay. Anybody in the public that wishes to comment on whether or not we're going to move 7.2 to March 10th? Not seeing anyone here. Anyone online? Bring it back to the board. We have consensus to move it to March 10th. Now I'm back to closed session. Earlier, I had stated that item 9.1 was continued based on our action earlier with the CDD item. We are going to not continue with that closed session at this point. Now I'm going to read off several more closed session items. Next being 9.2, Public Employee Evaluation, Agricultural Commissioner. 9.3, Public Employee Evaluation, Health Services Director. 9.4, Public Employee Evaluation, Community Development Director. 9.5, Public Employee Evaluation, Special Districts Administrator. 9.6, Conference with Legal Negotiator, Conference with Labor Negotiator A, Chief Negotiator Susan Parker, County Negotiators Jay Sloan, Stephen Carter, Casey Moreno, Pam Samick, Diana Rico, and B, Employee Organization, Deputy County Council Association. And finally, 9.7, Conference with Legal Counsel, Significant Exposure to Litigation pursuant to Government Code Section 54956.9 D2 and E1 3 potential cases. County Counsel?
Thank you, Mr. Chair. So by way of clarification, items 9.2, 9.3, 9.4, and 9.5, staff is requesting that those items be pulled from closed session at this time for today.
Okay. So we're going to pull those items at this time from consideration before we go into closed session. Is there any member of the public that wishes to make any comment before we adjourn? Not seeing any, we're going to go ahead and close the public portion of the meeting. And we'll be in a short resource as we close down.